All right, yo. So, yo, what's up for you on the YouTube replay? I hope you're having a great day. The market's doing pretty good. We hit an all-time high yesterday, so the fact that the market's still somewhat green today is good news. And dude, our largest holding in here now, Constellation Energy, continues to hit new all-time highs. Constellation Energy's at a new all-time high today. This is your main nuclear reactor play. We're up 80% on our position now. So Constellation Energy's going nuts. Same with United Rentals. This stock is also at a new all-time high today. So some of our dividend growth stocks in here are doing very good. Yeah, this is, if you look in the top left, it's called our dividend-only portfolio. All these are like dividend growth stocks. We also have our Roth IRA. Some of the stocks in here to continue to do good. Iron Mountain, this REIT we've been talking about, we're now up 7.5%. That's really insane for a REIT in just 1 year, where you also get the 3.3% dividend and all that. So that's pretty insane that they continue to win. That's your data center REIT right there. Hey, what up, Jello? What up, Liam? And another stock that's been doing very good is InnoData. It's slightly down on the day. It did hit a new all-time high, but now it's slightly down. But no complaints here. That one's been doing insane. So yeah, we also have our Moomoo portfolio also at a, well, I guess we're down on the day. We were at a new all-time high in here today still. We've basically never been over 25 grand in here before. So this is great news. In this portfolio, once I buy a stock in here, I literally try and never sell it. Yo, Ant said, what's up? I'm on break right now watching your live. That's what's up, man. Hope you're having a great day. Good luck with work. What up, Looney? I just went to Circle 2 days ago. I'm already up 10%. Wonder if you can go back to its early IPO price. Hey, yeah, we'll look at Circle and Amazon. I love all these companies. And so yeah, this is our buy never sell portfolio. I've been thinking, guys, this is crazy, but small chance oopsie, did I just disconnect my mic? I hope not. Okay. I might actually sell out of DocuSign one day. I kid you not. OpenAI just made something called DocuGPT. That's why the stock fell on no earnings. If you're wondering why did the stock fall legit 15%, it's because OpenAI made DocuGPT. So there's like a little seed planted in the back of my mind, wondering if I should sell out of DocuSign sometime. But anyway, let me give you an update on my super growthy portfolio where Robinhood just continues to win. So check this out at the very top. We're only up we're up 0.7% on the day. We're actually up on the day. That's great news. We're up 14% all time in here, but let's see what's moving in here today. And Rook, no way, my friend. Yeah, dude, thanks for the 2 roses. We'll get to Amazon. Yes, sir. So Sprouts Farmers Market continues to lose. We're down 22% on the AMD's down, SoFi's down, but overall we're up on the day. UiPath is green, Reddit's green. Robinhood is, dude, Robinhood stock is like, I don't believe it. The 150 now on them. Man, I regret every share I've ever sold on Robinhood. But anyway, I do also use Robinhood. Why is Sprouts Farmers Market only going down and down? That's just this market right now. I think investors just don't love the grocery store industry right now. Say what up, Prime Investing? Good to see you, man. Food2 worth another buy-in for DCA. Hey, yeah, dude, I love Food2. Cheapest brokerage out there. I'm surprised Food2 hasn't been doing as well as Robinhood. This is like a competitor to Robinhood with, in my opinion, arguably better, more safe fundamentals than Robinhood at its current price and current valuation. This trades at 19 times forward net income in arguably better financials. I mean, they're just really high quality. Remember I asked you about Plug? Hey, what up, Jello? Yeah, do you want me to look at Plug? That's actually not, I don't love that company for the net income they lose. So yeah, let's look at Amazon right here. Thanks again, Rook, for the 2 roses. I do own this stock, and I think this is a buy and never sell company. What do you think about SoFi? Hey, remind me to look at SoFi. I want to look at them. But look at this. Amazon, they are up on the day, which is good news. They have been going through a lot of news. Amazon Prime Air drones crash in Arizona, prompting federal investigation. Well, you know what? Most people see this as bad news. I see this as good news. I didn't even know Amazon was already doing their drone delivery. Also, Amazon is now expanding their Amazon grocery delivery business with their Amazon Prime brands. Like if you ever go on Amazon, you see the Amazon Basics brand, that business is growing insanely. But also this is a huge cloud play. I mean, this is their AWS business. This is over 100 billion of annual revenue for them. They're the #1 cloud service provider. Like this stock is literally a Walmart, an Oracle, an Instacart, a UPS, a robotics play, a subscription play, e-commerce play, advertising play, all in one. I mean, this is literally your buy and never sell stock. #1 robotics play right here. Stay away from like that rich tech robotics I keep seeing people say in chat. That's some revenue-less startup with no IP or patents. This right here, this company has real growth. I mean, the revenue's up 13 and the net income's up 35. They're expanding net margins. That's the real story here, the margin expansion. So anyway, Amazon's a company you just buy and never sell. Okay, so here's the thing. I judge a company based off their fundamentals. Oh wow, look at that, up 39% on the day. Is there any specific news? Let me go to the news here. Um, just a price target increase? Is it just momentum today? Let me go to the intelligent comments here. Well, anyway, here's the thing that scares me about this stock right here. And let's see, are they growing at least? So sales of electrolyzers, look at that. Just a year ago, actually, those are some nice growth rates. But here's the bad news, and they really need to turn this around quickly. But they lost 230 mil, 200 mil, 1.4 bill, and basically just for eternity. Like this company just burns through like hundreds of millions in net income a quarter, and this is unsustainable in my opinion. That's why if we zoom out on the weekly, there's some momentum now, but the reason the stock is pretty much at all-time lows is because there's some bankruptcy risk. I don't know if there's any real news today. Is it literally just someone adjust the price target from 3 to 7? I'd be careful at Plug Power, but congrats if you owned them before today. They delivered 100 megawatts of electrolyzers. Oh, hey, pretty cool. Yeah, that was their biggest business right now. So what software are you using right now? Hey, what up, Pepper? Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. And hey, it's yours, said APLD. And you know who owns APLD? Someone said CoreWeave as well. Well, these are both in the NVIDIA portfolio. So if we go to the NVIDIA portfolio right here, CoreWeave and APLD are honestly two very similar businesses. They're both like data center hosting companies, and APLD and CoreWeave have gone into so many partnership or into a huge partnership because of NVIDIA. Like both of them have really benefited from being in the NVIDIA ecosystem. CoreWeave just got the deal with OpenAI after NVIDIA invested $100 billion in OpenAI, and then CoreWeave got a deal with APLD. There's just been so many like synergies going on for the whole ecosystem. I would still be careful with this name, like a lot. Like I certainly wouldn't touch a lot of these. Like I wouldn't buy APLD here. CoreWeave might be a little different. Let's actually look at CoreWeave right here. Oh, looks like a insider sold 42 million. It's not too big of a deal. I mean, but one thing I really like about CoreWeave is how growthy they are. Like, check this out. The revenue went from 400 mil to 1.2 billion, a 3x increase year over year. That's an insane growth rate. And look at what the analysts are expecting. It was 1.2 billion, a record this quarter. Analysts are expecting 1.8 billion. Why you say no to rich techs? They're backed by NVIDIA. That's actually not true. A lot of these companies, whenever they announce like we have a partnership, it's all just PR. But this is a momentum play right here. If you look at any of the quantum stocks right now, some of the nuclear stocks, they're all doing great, and this is the market to own this one. But this is kind of a momentum play. Like if you're looking for a real robotics company, like this is when you trade. You don't. It's hard to trust this one. I mean, if we look at the revenue, like it's $1 million a quarter, and it's down 20% year over year. Like when we look at their financials, like it's just hard to trust these. So the revenue's down 20%. It was $1 million. This is practically a startup. They lose a bunch of net income every quarter. No IP or patents here. I'd pick like a symbiotic, over long term. Like right now, this is the market to be in for these momentum trades, but no real fundamentals there. I'd be careful. I bought APLD and at $4 and sold it at 11. Well, hey, you can't go mad at a 3x, right? So, CEG, y'all are gonna be crazy. It has the word rich in it, so it must be a buy. I agree. Yeah. Hey, no, of course I never try and bag on anyone's stock. There's someone gave a rose to look at rich tech, and then I kind of bagged on it. It just when I look at the financials and just see $1 million of revenue a quarter, it's tough. But someone said CEG, this company has been going insane today. They're up 3.3% to a new all-time high. If you're looking for a nuclear energy stock, this is the number one nuclear play out there. If you look at any of the nuclear, like the small modular reactors one, did you know this? In the whole entire world, there's only 3 working small modular reactors, and none of them are in the US. So Oklo is like years away. I've looked at all the nuclear stocks out there. This is the one you want to own. I've actually done more research on this one. They literally own 30% of every US nuclear reactor. It's a higher number when you look at the active fleet, but 30% of all the whole entire US's nuclear reactors are owned by Constellation Energy, largest pure play for nuclear energy. There is no close second. They own like 21 when Vistra Energy owns 3, and that one's anyway, great one. Would wait for a dip on CEG. I totally agree. No, UZG said I sold CEG last week. Hey, you know what? Maybe you'll get a chance to buy back in, but I can't wait for the Calpine acquisition to go through on this company, because when that goes through, that's instantly accretive, $2 a yearly EPS. I'm not shocked to see this one at an all-time high. This is your good, real fundamental nuclear play. Adobe, please. Hey, should we look at them? Reddit a buy at 200. I'd probably wait a little longer. Hey, what up, Steven? Good to see you. And Juan said, do you like any beaten down stocks? This one could get beaten down a little. I'm not going to go into much detail about them, but this one could fall a little more. Look at this. I caught a falling knife here. Could go lower. I honestly could go down to like 95 or something, but this one's worth putting on the watch list. That's a grocery store. I wouldn't have it as a huge position, obviously, but that's what I'm watching to maybe buy more of. Oh, guys, hold on. I got a new stock for you. I bought this for the first, I did not feel nice about paying this multiple. So I just bought one share as kind of speculation, but they're trading at 500 times forward net income. But this right here is a stock I eventually want to make a bigger size position. I eventually want to own this in a different portfolio. There's Axon right there. They are the government contracts are crazy. They're the ones supplying police stations with body cams, like the body cams and the software, so they can get the cloud data. They're a really cool company. #1 market share. So let's go to SoFi. I saw that one a few times. I forgot to get to it. My apologies. My bad. Let me know if you want me to look at Reddit too. But let's hear SoFi right here. They're down on the day. They're honestly just having a little bit of healthy little RSI retrace, I'll say, because the valuation is still expensive. Like even at 25, I would I, if I wanted SoFi as 5% of my portfolio, would I do it all today? Certainly not. Maybe 1%, but not the whole 5. I mean, this is a great company, though. This is a kind of stock that just deserves the high multiple because they're high growth. You know, usually the financials explain why the stock is either doing really good or really bad. We can see where the revenue comes from. They're a fintech. They have their own banking charter, and check out the growth of their financial services. This is the reason the stock is so growthy. I mean, this is insane. I mean, literally in the full year 2020, the revenue was 11 million. So this nothing. Now for the full year of 2024, it was 821 million. Look, this is on a quarterly basis. It's up 105% after going 85, after going 222, after going 264. It literally hits a new record every year, every quarter. So that's super growthy. They're also in lending and loans. And this business is also at a record up 30% year over year. So people, I think, are just really starting to take SoFi serious. They're beating on the analyst expectations. You know, that's the orange line there. And look, they're beating every quarter on revenue. They're beating every quarter on EPS, which is net income, and every quarter on EBITDA. And revenue of 850 mil. Out of that, 100 mil was net income. I love SoFi. I might be biased. I do own them. They're one of my best performers, and I regret. That's one of the stocks, just like Robinhood. I regret every share I've ever sold to them. But we're up 24, or we have 24 shares. We're up 327% on them. I've owned them for many years. Which application is the best at it? Yeah, so I have all three of these apps here. You know, I got Robinhood. All three are the best here. But the honestly most useful, best one, in my opinion, that I'd recommend, you know, not financial advice, is this Brokerage right here. If you want to get it, it's in the link tree in my bio, the very first link. It's an affiliate link too, full disclosure. But I have all the links linked up there with my affiliate links. If you want to get Robinhood, this is where I have my Roth IRA. You can't have a Roth IRA on Moomoo, but I keep my Roth IRA with them. Anyway, but this is my favorite one to do analysis. Link tree in bio, first link. So let's see here. Wendy's stock. Hey, D-Tish, what up, dude? Good to see you. So here's Wendy's. I saw your comment. You left me a comment on my Discord about like a seatbelt stock. And I looked at it, but I never got back to you. My apologies. Let me know what the ticker symbol was. Was it ALV? But anyway, here's Wendy's right here. A lot of the restaurants are struggling, and it's not just Wendy's. I mean, Wendy's is literally the same price that it was back in 2008. They're kind of getting their lunch eaten, pun intended, by McDonald's and just tariffs. But it's not just them. I mean, look at Chipotle stock. I mean, as we can see, this isn't just a Wendy's problem. We look at Jack in the Box. This is a sad story. They're going bankrupt. Jack in the Box. This stock is at an all-time low. I mean, look at that. That's not great. So yeah, what's another restaurant? Dude, Krispy Kreme. Oh, RIP Krispy Kreme. Look at that. All-time lows. They're only worth 600 mil. Wouldn't buy them at all-time lows. Hey, what up, John? So, TEM has been one of my favorites. It's been doing really good right now. Yeah, Tempest AI is good, growing fundamentals. After they have so much growth. I really like them. So someone said, Lee said Uh, Aramark. I haven't heard of this company before, but let's go give them a quick analysis. So, food support and services. Um, that revenue is down from 2018. So, let's just look at the profits though. Wow, they're really profitable. Look at that, making basically, if you average it out, close to 100 million of after-tax net income a quarter. Revenue's growing single digits. It's up 5%. 1% last quarter, but they're still able to grow their really low margin business, 1 to 3% net margin business, but they are able to slightly grow it. At least they're making net income every quarter. That's the good news. And you get a 1% yield here. But I kind of want to see more growth. That's a food commodity stock, it looks like. So ALV stock, what's this one? This is Auto Live. So this company, let's go look at their financials here. Was this that seatbelt stock? So yeah, look at this. They sell airbags, steering wheels, and other, just commodities. But it's only up 3.7% year over year. That might be why the stock has been flat for a while. Seatbelt products and other, that's up 5% year over year. What's cool is the original creator of the seatbelt had a patent on it, then made it publicly available for everyone for free. Oh, look at that. So do note 30% of the revenue is from Europe, only 20% comes from the US, 20% China, excluding China, another 20, America's 12. So a lot of the revenue comes from outside the US, but they're doing great fundamentally. Wow, they're able to grow their margins. So if you go to the revenue, negative revenue numbers, but all positive by really good green year over year growth rates for the net income. So they're able to grow their margins even as revenue is declining. That's great news. These are look, they're making 100, 250 million net income a quarter, and you get a 2% yield here. I'll add them to the watch list. This is your seatbelt airbag play. Kind of cool. Hey, Danny Sog, what's up, dude? Hope you're having a great day. Adobe, please. Yeah, let's look at Adobe. So this is one of the companies really being hurt by the AI thesis. So basically, they're saying in 10 years from now, will we need Photoshop? Will we need After Effects? Or will ChatGPT? And because a lot of people are making great logos in ChatGPT, but I always think we're always going to need the final touch for art, especially for real professional stuff. So I think Adobe's going to be turned from a AI loser to a slight AI winner, and it maybe reprices the stock to closer to $450. I like for right now, the fundamentals are great, but it's that the uncertain future is why the stock is really trading at this low PE. But anyway, look at this right here. They're printing money. They're making 1.7, 1.8 billion in net income a quarter. And what is Adobe doing with all this net income a quarter? They are literally spending so much money solely on share buybacks. They're spending nearly 2 to 3 billion in net income quarter on stock buybacks. What does that do for you? If we look at the net income grew by 5.2, but the net income per share grew by 11%. Thanks to the share buybacks. Pretty impressive, I will say. So they've bought back literally 6% of the entire company just in the past year. That's literally, if they spent all that money on dividends, you would have gotten over a 6% dividend yield, but instead they spent that money on share buybacks. I love that about Adobe. So I think honestly they're worth nibbling on. I wouldn't go full size position in them, but they're maybe worth a little nibble. Can you look at UNH? Yeah, let's look at UNH right here. So that's actually a stock that was bought by the homie Buffett in the Buffett portfolio. So that's one of the reasons why the stock has really been rallying. If we go to his newest positions, yeah, he bought 5 million shares of UNH. He also bought some LAMR and some other stuff. But let's check out UNH right here. Buffett, if he buys a stock, it's usually seen as good. Like that's solely the reason the stock went up on this day was it was disclosed that Buffett bought the stock, and he doesn't buy a stock unless he really does his due diligence and his research. So that really set the stock up, and it's kind of just been up ever since. I forget if there was some good news around here. Maybe the chances of fraud allegations are going down because if this company gets accused of fraud, they'll get kicked out of Medicaid and Medicare for 5 years. Yeah, that's like if we look at the EPS right here, the net income is supposed to fall 50% plus. It was $5.90. It's going to be $1.70. That's not great. And that won't even be able to afford the dividend. So that's one of the reasons why the multiple is so low and collapsed. But it's kind of being unpriced in right now. Like the chances of them actually probably gonna get kicked out and stuff are going away. So that might be the unpricing of it right now. I'd still be very careful with this one, especially at this price. Like maybe I certainly probably wouldn't touch it here. Maybe back at the 315 level. So I mean, you get a nice yield there. We're a customer. We use OptumRx. Hey, what up, Zeus? Good morning, my friend. Oh, hey, it just hit noon. So good afternoon, technically. Uh, Where Adobe software will always be important is photography. Why would anyone let AI replace that? Yeah. Yo, one thing that was crazy, Adobe also has like a digital signature business like DocuSign does. Yo, I'm actually considering maybe selling DocuSign. They really don't have a moat, but OpenAI and ChatGPT just made something called DocuGPT, direct competitor to them. And that's the whole reason the stock fell 12% that day. Kind of crazy. So. Is OpenDoor done? I want to hear your thoughts. So this is a huge momentum stock. I mean, what this company does is they flip houses. Historically, they haven't been very good at it. Their renovations aren't good. Um, but this stock is really going to this is all momentum right now, but it really benefits from a lower interest rate environment. And that's why investors are kind of excited right now. If we go back to 2021, 2022, when the rates were zero, like look at the revenue and growth. I mean, they were doing 4 to 5 bill of revenue a quarter, but look at what happened as rates hiked up very quickly. They're super interest rate sensitive. Sales fell 62, 69, 70, like sales plummeted. And we're really waiting, and they also just burn through net income every quarter. But we're waiting for a lower interest rate environment to see those come back. I think this is definitely like too much momentum. Like I advise staying out of this one unless you're swing trading it. You're trading it like if you're looking for an interest rate sensitive stock, I would just go somewhere else outside. OpenDoor, maybe like a home builder or something, more like a Rocket Mortgage. But yeah. Okay. UROY. What's up? UROI. So uranium royalties. So yeah, this is one of the uranium plays, which has really been on fire because the nuclear stocks have been on fire, and nuclear needs um, uranium to function. And look at that. They basically just had their first ever like $33 million of revenue. That's the highest revenue ever. They make money on that. And was that real? That was real net income. So actually that's great news for the first time ever. Like this is real, not some adjustment. They made $1 million in net income. Oh, wow. Look at that balance sheet. What's the cash? So, or they have 50 million of cash and no debt at all. Literally no liabilities. So that's kind of like, so this is in Canadian, so we'll convert the revenue to USD. So 10% of the market cap is cash. They're finally making some net income. They're interesting as a uranium play. You know, if we just look at the whole uranium sector via the uranium ETF, ticker symbol URA. I mean, look at the uranium ETF. I mean, it's done great since 2019. But if we zoom out on the monthly, you know, it's lower than it was in 2012 because commodity. But I'd pick and choose uranium plays. I do like that one. Man, InnoData has been flying since this week. Yeah, dude, InnoData has been nuts. Dylan said what happens is, yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite app to buy stocks on. So, and to do analysis. So, Norm said Tesla. Oh, I don't know if we should look at Tesla. Could you look at Wendy's financials? You kind of skimmed it. Yeah, actually, Wendy's does make like 40 to 50 mil in net income a quarter, which is good, but the revenue is just on a huge decline. We'll maybe get back to them. But here's Tesla right here. Oh yeah, hey, remind me to look at Nebius. Hey, I'm not trying to ignore anyone. I'm reading 2 chats here. So here's Tesla. This is a hard company to buy because it's a $430 stock. About $300 of it is the future is allocated toward the robotics and the robotaxi future network. And it's just hard, in my opinion, to pay that premium right now. Because if we got, and it's okay to have a high valuation. Like this company trades at 255 times net income, you know, pretty expensive, 255 times net income. And it's okay to trade expensive as long as you're high growth, but Tesla kind of just lost its growth. It's not really growing anymore. Like their total vehicles delivered are down 13.5% year over year. We can just see that if we go to their total automotive segment, which is 88% of the entire revenue, it's unfortunately down 12.3% year over year. It was down 50% last quarter. So they lost the growth here. And if we go to the energy business, it's down 7.5% year over year. So it's tough to pay so much premium for the future. I think is a little bit uncertain. Also, their profits, dude, they also did some little gap net income trick to make the net income look higher than it actually was. They do this all the time. But if we just go to the revenue's down 12% on Tesla, and the profits are down by 58%. And last quarter, they were down by 57%. You know, it's tough for Tesla. Like so, but of course, the cult will prop it up. Well, but that's not a bad thing. It's kind of like a lot of other stock. So I just be careful with that one. It's just tough to pay. It's tough to have serious money in Tesla, in my opinion. Certainly at this valuation. Or what app is this? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on it. It's actually a brokerage. So yeah. Someone said Nebius. All right, let's get to Nebius right here. You know who owns Nebius is NVIDIA. So if you go to the NVIDIA portfolio, obviously they own CoreWeave, ARM. But again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on it. And when we go look at Nebius's fundamentals, I mean, they're actually very surprisingly good. Also, they just had like a legit $15 billion deal with Microsoft. But if we look at the revenue, this is insane. The revenue went from 14 mil to 100 million, like year over year. That's insane, the growth here. And if we look at the expectations as well, it was 105 mil this quarter. It's expected to be 264 million in 2 quarters. And if we go to the news right here, yeah, Microsoft signs a $19.4 billion AI computing deal with Nebius. So the sentiment is certainly in Nebius's favor. There's going to be a lot of future growth. So they're interesting. Would I buy them here? Probably not. But that's one I think deserves to be at all-time highs. Super growthy. For your own personal portfolio, how do you find the stocks? I've been investing for 4 years, and I've just come across tickers through ETFs, through articles, videos. I've just, hey, John, what up, dude? You said Google. Hey, yeah, let's look at Google right here. I do own them. Let's see. Sell everything like I am. Hey, what up, ex-dividend dad? Good to see you, man. Talek said NGDMATH. What up, pumpkin? Yeah, we'll try and get to these. So here's Google right here. This is a perfect never sell stock. In full disclosure, I do own them here in my Robinhood portfolio. I think they were down on the day. Let me go to they're in my dividend only portfolio, which actually I believe is at an all-time high today, which is pretty cool. I don't think pretty cool. But anyway, one of the stocks we own in here is Google. Oh, they're actually having a nice little recovery. But yeah, we're up 51% on them. I didn't even buy the dip on them. Okay, but anyway, here's Google right here. Perfect buy, never sell stock. If you have the intention to never sell Google, it might even be worth buying today, in my opinion. Check this out. Here's the PE, which is net income multiple plus any buybacks or dilution. They trade at 26 times net income. This is an ETF in one. I mean, they own Android, they own YouTube, they have the Google Cloud business. Just the Google Cloud revenue's up 32 after going 30. It just hits a record every year, every quarter. They own Waymo, they're in quantum chips. This is an ETF in one almost. If we look at the revenue's up 13, but the net income is up by 19. This is insane how they're able to expand margins. They literally make 26 billion plus of after-tax net income a quarter. They're literally making over 100 billion of annual after-tax net income. And here's how they return that to you as a shareholder, because they just started paying a dividend. The dividend payout ratio is really low. Here's the coolest thing about Google. If you look at the very top, they legit spend 15 billion of their after-tax net income a quarter solely buying back their own stock. So, and here's what that does for you. The net income's up by 19, but net income per share is up by 22.2. That's insane. So I love Google for the dividends, share buybacks, the growth, the AI. Looks like Gemini is beating ChatGPT now. So a lot of fake. But yeah, hey, watch out for people impersonating me. I'll never follow you, DM you. By the way, I don't sell anything. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. You watch out for people impersonating me. It's not me. So Talek said NGD. So this is new gold. Oh yeah, so this is a gold play. Basically, the reason the stock is at an all-time high right now is just because the actual commodity of gold, which is IAU, is at an all-time high right now. So, congrats if you got any gold right now. It's been on an absolute tear. It's the highest price it's ever been. Maybe if you got any gold chains, gold jewelry, maybe go hit up the pawn shop. Umar said, what app is this? Yeah, hey, if you go to the link tree in my bio, it's the very first link there if you want to get this app I'm on. It's where you buy stocks on Brokerage. So, yeah, hey, no problem there, John. AMAT, can you explain the news, how they lost a... Wait, hold on. What up, Looney? AMAT. My biggest position is SoFi now. Hey, nice, Sludge. SoFi is that's my second best performing stock ever. So here's Applied Materials. Wait. How they lost 100 million revenue a quarter. Did they just report earnings or something? I don't know, but let's see what their numbers are. So semiconductor systems are 75% of the revenue. Looks like the revenue is supposed to fall the next 2 quarters, but looks like they are making net income every quarter. They're making 1.8 billion in net income a quarter. You get a near 1% dividend yield here. This is one of the cheaper semi plays, but just because they're a bit slower growth, like the revenue's up by 7, you look at Broadcom, Nvidia, AMD, it's like 30, 50% growth. So a bit slower growth for the industry, and that the margins aren't really growing either. Revenue's up 7, Net income's only up by 4, so that means the net margin actually did decline a bit year over year, but that's why the multiple's, relatively cheap for the industry. They're trading at 26 times net income. Industry average is at 34. So they're interesting. I really like MU right now, Micron. Hey, Luke said ORLA. What is that one? ORLA mining. So yeah, this is I wonder what they mine. Maybe gold, because gold's been doing really good. So let's go see what they do. So, okay, so those are the mines they own, and they own a capital pool company. Okay, so they're in gold. Yeah, gold. Where are they from? Mexico. So it's like all their mines are in Mexico. And yeah, look at that growth of the revenue. Again, probably just because gold's at all-time high, but revenue's up 3x year over year to a new record. And they're making net income on that too. Yeah, it looks like, see how it says they lost net income last quarter? It was a one-time adjustment from this acquisition they went through. I'm guessing, let me see, cash from financing. Yeah, so, or cash from investing activities. This is negative. That means they bought a company with this. So they spent $850 million on a company. That's how their assets went up like this. That's why the net income went negative too. It was a one-time adjustment. You really look at the operating profit to see the underlying business without those one-time adjustments, and we can see that it's booming. So yeah, they're pretty cool. I like that one. Pseudo gold play. Again, I maybe just rather buy gold, but maybe they'll outperform, or maybe you'll get a dividend sometime in the future with them. So Felix said CLNE. Someone said right. Yeah, hey, the Bitcoin mining companies just don't do good compared to Bitcoin. What's your annual return on investment? Or for like this portfolio, I think we're up like 20% in the past year. So here's Clean Energy Fuels. They're at an all-time low. They're worth 600 mil. We don't like to cover these really small companies. They sell fuel. Where do they sell it? Okay, all in the U.S. Revenue's up 5. Wait, net income. Okay, so this is the bad news. So remember how the whole company is worth 600 million? Well, they lost 135 million, or they just lose money every quarter, and that's really unfortunate. When you lose money, your assets just like decline every quarter. So we really want to see this one try and get profitable. I like that the sales are growing. The revenue's up by 4.7, still a little low. So this is an oil and gas play. They just sell commodity. I'd probably rather pick just like a Chevron, Exxon, or Constellation Energy over that. What about Meta? All right, we'll look at Meta. What up, Lucas? So Meta stock. Hey, what do you think about IPO? What up, FL Bait? What up, dude? Yeah, sorry, we'll try and get to all of these. How about Palantir? What up, Dylan? Yeah, we'll get to Palantir too. So here's Meta. This is a great stock to buy, never sell as well. They're kind of, let me see if there's any news around them. Anyone see the new Meta AI glasses? They look pretty cool. It's cool to see them actually do some stuff. So they're trading at 26 times net income. That's pretty fair, and that's not on some like one-time adjustment either. Like they're really trading at 26 times net income for a Mag 7. I think they have the ability to go up to like a 30 before they really max out. We can see their active users. This is the crazy part. They own Facebook, Instagram, Threads, WhatsApp. They have 3.48 billion daily active users. That's insane, and it kind of reflects in the numbers. The revenue's up 21% to 47 billion. Out of this 47 billion of revenue, 18 billion of it was after-tax net income. They're expanding margins. This is a $2 trillion company with 40% net margins. I mean, they're printing money with their ad business. So deleveraging, I mean, look at, if we go to the cash from investing activities, this is why I love them right now. They're so investing in the future. 25 billion the most recent quarter. So they're kind of lagging on AI. Like the llama thing isn't too popular. I mean, really good. Gemini and ChatGPT has replaced it. So let's look at Palantir. We could look at MATH. Yeah, what is MATH? I haven't heard of that one. Thoughts on the quantum stocks? I don't love the quantum stocks. Yeah, I'm seeing a lot of people say math. I've never seen anyone say that ticker symbol before today. So we'll look at them. So here's Palantir. They're down 4% on the day. What is this at the top here? Anduril and Palantir Battlefield Communication System has deep flaws, Army memo says. So something from one of their government contracts might be. Here's the one thing I love about Palantir is the fact that the government is 55% of the revenue, like the military, Air Force, I mean, police stations, they all use their software. And this is up, it's so growthy. It's up 49% year over year after going 22, after going 14. Like the growth rate is growing. So the government revenue is at an all-time high, as well as their commercial side with S&P 500 companies. It's up 46% after going 32. Like the growth is just nuts on both businesses. And they're also really profitable too now. Revenue's up 48%. and the net income's up 142. They have a legit 33% net margin. They have no debt at all. They have a freaking fortress of a balance sheet. Literally no debt at all. $6 billion of cash, up from $4 billion. So the valuation's nuts, though. They're trading, dude. The valuation's still nuts after falling 5. So any bad news will probably send the stock down a bunch, like future growth concerns. I really want to buy Palantir, though. I hope we get that bad news so I can maybe buy them. But it's like we need to fall 10, 15%. So someone said math. Let's check it out. So, okay, this is a $150 million company, extremely small market cap. But let's check them out. Unrealized fair value change of digital assets. So this must be crypto related, I'm going to guess. Capital markets. Okay, let's see. Did they have numbers? Well, they did make a net income. Wow, look at that. This is for the fiscal year 2025. So it was 44 mil, and they did 15 mil in net income on that. So that's real profits. I don't know. Maybe they realized sale of crypto products or something. I don't know. I got to do more research on them, but for now, I like the fact that they're making that income and the growth seems to be good. It just looks really confusing. Any good buys for today? Hey, what up, Walk? I'm not seeing much. Hey, what up, Kev? Good morning. I'm not seeing too many. I haven't bought anything today. Sprouts Farmers Market looks okay. I mean, I don't catch a falling knife. I'd nibble on this one, maybe. I'm down 22% on them. Main's been on a dip. If you're looking for that chicken egg stock, I've been buying more of this stock. They make crazy money. So, is growth stock worth to DCA? Yeah. What is DCA? That's dollar cost averaging. So instead of spending all your money at once buying a position, like if you want a stock to be 10% of your portfolio, don't make it 10% in one day. Maybe make it 1%, then the next week another one, you slowly add to it. But that doesn't always save you. Like look at this stock right here. I dollar cost average into it, and I'm still down bad. So always do your own research, but it's just a more disciplined approach. Okay. Is Reddit worth buying? Wait, FRMI. What was this one again? This is for me. Oh, so this is an IPO. So they literally just became public on October 1st. So unfortunately, we probably won't have too much history. So yeah, just because they literally just IPO'd, we don't have any financial data for them. So I wish I could give you some financial thoughts on this one. But since they just IPO'd, I can't really. My apologies there. Garon, what up, dude? He said Reddit. Is Reddit worth buying? They are, and I do own them. I might be biased, but I don't know about right here. They're certainly worth putting on the watch list, though. So, I'll show you my position if you want. This has been one of my better performers. We bought them during the basically April dip. We bought them under $100. Pretty clutch. We got a good cost basis on Reddit. I'm thankful. This is a stock that deserves it's a lot of people think this is just a meme stock with no financials. They have real growing fundamentals, beating on expectations. Like I didn't even expect this. Yeah. Oh, dude, try not to spam. Hold on here. Yeah, that's not cool. There we go. All right, so look at the revenue right here. The revenue's up 77% after it grew 53, after it grew 23. Like, I don't know how they're able to continue this high growth momentum on Reddit. And it's not just the revenue that's growing, but the profits. 90 million in net income, and that was real. Like plus the interest, if we look at the analyst expectations, like the orange line's what the analysts expect, huge beat on revenue, huge beat, double. They beat by over double on net income expectations and on EBITDA, more than double on EBITDA. Like they really do deserve to be at this all-time high price. Plus, look at this fortress balance sheet. They literally have no debt at all. Debt-free company, over $2 billion of cash on hand. I mean, the cash flow is also super growthy. So Reddit's it's a $200 stock, like it should be. $200 plus stock. Hey, what up, Odyssey? No way, dude, with the 5 lightning bolts. Thanks so much. What are you going to do with USAR? Are you going to sell it or keep it? Well, I actually don't own that company, but this is USA Rare Earth. Wow, look at that. This is kind of like the next stock after and we saw Lithium Americas, MP Materials all get deals from the US government. Maybe this one's getting a stake. Oh, wow, look at that. Yeah, USA Rare Earth stock jumps on White House talks. Another stake in another U.S. rare mineral company. That's very interesting. So that could have be a nice pleasant change for, their balance sheet's trending in the wrong direction. Now a lot more liabilities than assets. Do they have sales? So yeah, they're a revenue-less company. Maybe they're looking to open a mine soon, but That's interesting. I'd probably take a little bit of profits on them. But let's see, did MP Materials continue to climb after their initial deal? Yeah, so look at that. They momentum up and they chilled out, momentum up again and slow. So maybe don't fully sell out, but take some profits, I would say. No, oh, hey, none of this financial advice, of course. Thanks. Um, I've had Palantir for a while. It's at a new benchmark. Should go to the 200s. Oh, hey, that'd be great. So someone said MongoDB. What up, Steven? MDB. So MongoDB, this is like a international software play, I believe. So they just had a nice gap up on earnings. What did they do? So yeah, I'm not shocked to see them gap up on earnings. They had a really nice beat. I mean, the revenue, huge beat. Oh, the huge beat on the loss expectation and on EBITDA. So it really was a good quarter. Triple beat. Revenue's up 23. The net income losses are narrowing. So the reason the stock gapped up is because they had a huge beat on what the analysts expected. MongoDB, Atlas related. Check out that growth. I mean, there is no like downtrend. That's insane. Yeah, look at the annual revenue. 2019, it was 60 mil, and it just grows every quarter. So yeah, pretty insane. Yeah, thanks again, Odyssey. I really do trust that. Manny's not looking at the comments. I do see all the comments here. That's why I try to go really quick with all the tickers here, because I just can't possibly get to all the sticker symbols. I apologize. But look at this. This is what I was saying. Only 33% of the revenue comes from the US. Then there are some of these other countries as well. So anyway, that's MongoDB. Hey, Joe, dude, he said flare. Is that a ticker symbol? What is flare right here? I type in flare. I can't find that one. But dude, Joe Padilla, thanks so much for the 9 roses. I really do appreciate that. Small caps are back. Yo, I do see some crazy momentum right now in some of the small caps, like the quantum names. I hardly ever buy on Friday. Yeah, I feel you. Tesla and Alphabet. Yo, Duncan, we just looked at both of those. I apologize. If you comment them a little later, I'll probably get to them. Happy Friday. Hey, what up, Claudette? He said ARKX. That's an ETF right here. Sadly, a lot of people have lost a lot of respect for Cathie Wood because her ETFs have so much underperformed. But this is her space exploration and innovation ETF, not her main ARKK ETF. But let's see what it holds, because I'm going to judge this ETF based off what it holds. Let's go see what it does. So an ETF, again, is just a basket of stocks. It just owns a bunch of individual companies. So if you buy the stock, $10, if you put $100 in this, $10 of it goes to Kratos, which I do like, super overvalued though. Oh, Rocket Lab, Teradyne, Palantir, Trimble. I've never heard of that one. Maybe we could check some of these out. How's Trimble doing? Anyway, that's how sometimes you can find new, really cool companies. You look at an ETF and then you look at its top holdings, and maybe you could find new companies. Like, hey, I've never heard of Teradyne. What does that do? Maybe you could find out about them. So anyway, that's pretty interesting. Her main ETF right here, if we go to the Cathie Wood portfolio right here, her main portfolios, Tesla, dang, Robinhood, her Robinhood shares must be up crazy. Coinbase, Roblox, she lost a lot of money on Zoom, UiPath, DocuSign. Who's the idiot that followed her into like UiPath and DocuSign and stuff? I don't know. But anyway, and like Roku, Peloton. Dude, she was a huge Peloton. What was the other, like Teladoc? Dude, her Teladoc. Anyway. Hey, someone said, are you still holding UiPath, or are you selling? I did trim a little bit more in my position. It's $13 today. I was able to, what did I sell it? I was able to, $13.57. So I guess not too big of a deal. But yeah, this is one that we've been down bad on. The CEO, right here on this day, the CEO quit out of nowhere, left the management team for dead. Cash grab, it looked like. Terrible look. So they're too cheap to sell, though, to take the huge loss on. Are you up on your calm? No, Luffy. They just reported earnings. We're actually down 7.6% on them. But when you include my dividends that I've received, I'm only down like 2%. Pretty cool. SoFi is doing quite bad recently. I'm not shocked about that. They need a healthy RSI retrace, so they've been on some fire momentum. They still, even right now, they're not cheap. They still traded 81 times forward, next year's net income. 81 times next year's net income is pretty tough to pay. So I'm not shocked to see them come down a little bit, but that's a super growthy company that deserves a high PE. Might be biased. I do own them, and that's a stock I regret every share I've ever sold them. And thanks again, Joe Padilla, for the 6 roses there. I do appreciate that. What app do you use? Great show. Hey, thanks, man. Yeah, if you want to get this app, I'm on. I have, honestly, all these apps are linked up there if you wanted to get Robinhood or something. I have affiliate links on the link tree in my bio. So, hey, if you want to get any of these, it'd help me out. Use my affiliate link. So they're all in the link tree in my bio. This is my personal favorite one, though. In my opinion, it's the most useful one. Lowest fee brokerage out there. Doesn't cost nothing. So if you want to get it, it's in the link tree in my bio. Very first link there. Anyway, let's keep going here. Copy ETF. What is the copy ETF? So this is the Insider Value ETF. It's at an all-time high today. Let's see what it owns. I am curious. So I've never heard of these. I've never heard of any of these. What the? And I've heard of a lot of stocks out there. Wow, that their largest holding has had some crazy momentum. Uh, Stone X. Wow, what is Stone X? Commercial, Middle East, Asia. Oh, this might be. Oh, these are all international stocks. None of these are US, I think. That makes more sense. Okay. So, yeah, I see AG, SA, PLC. So, yes, these are a lot of international names, but that's an interesting ETF. Maybe some way to get exposure outside the US, and they're doing great. I would like to know your accounts are using a paper trading account. Is it beneficial? Yeah, you can have like a side portfolio. If you go to my portfolio on Moomoo as well, you can display your portfolio. Hey, if you're on Moomoo, you can give me a follow if you want. But you can display like your paper folio. I have some stocks in my paper folio, like Amazon, Powell Industries went nuts. We're down on Sprouts Farmers Market in here. This paper is not real, but it's cool to sometimes have a fake portfolio just to mess around and see if I did this, would I be right? I totally recommend doing the paper trade. I do it too. And you can see your rank. And actually, what's pretty cool is, I'm only up 12%. Oh, I wonder how I do this again. If you go to communities, then you go to more, then you go to Move Folio at the bottom here. You can see everyone on this app has their public displayed rank. And I think I should be around here or something. I might be ranked 100. Oh, wait. Did I go past myself? There I am. Look, 81. So there's me. So, hey, maybe you could try and beat me. Sorry. Let's get out of here. Oh, yeah. Hey, yeah, this app is in the link tree in my bio, the very first link there. Okay, so Helen, what's up? Said ONDS. Hey, improvement, Resolve AI. What's the ticker symbol for that one? So here's Ondas Holdings. This is a huge momentum play right now, and the future looks pretty interesting with this stock. Because if you go to the analyst expectations here, look at this. The revenue was $4 million. It's going to go to $9.4 million in 2 quarters. Like, if they're going to be doing $10 million of revenue a quarter, that's going to be great news. They're also, let's see, yeah, the revenue went from 900,000 to 6 million. It's easy to grow small numbers, but yeah, if they can meet these expectations, hopefully lose less net income, because they are burning through like 10 mil a quarter. But it's not the end of the world, because if you're wondering how did they just fortify their balance sheet like this, like the liabilities went down and the assets went up, well, they take advantage of this momentum and they've been diluting you. They've been issuing shares. So do beware. Maybe they'll sometimes issue shares like they diluted you by 51 million. But oh, hey, no way. Yo, Justy. Yayota, thanks so much for the roses there. No way, the caterpillar. Hey, hope you're having a great day. Thanks so much. I really do appreciate that. If you got a stock you want me to look at, let me know. That just made my day. I do appreciate that. No way. So I don't like paper trading because if I'm up big on it, I'll be mad I didn't put real money. I feel you. I'm going to use AI and see what might happen. Okay. So Dragonfly Energy. Hey, what's the ticker symbol for Dragonfly Energy? That sounds interesting. Because you're awesome. Hey, thanks so much. I do really appreciate that. So Lanny said Innodata, FLR on Coinbase. I actually don't have Coinbase. I actually don't own any crypto at all. I kind of regret not owning some Bitcoin, because you see how good Bitcoin's doing. No way, the chirpy. Yo, Justy, please save that cheddar for yourself and buy some stocks. I really do appreciate that. Thank you so much. Wow. So here's Verizon right here. Here's the thing with some of these higher yielding dividend names. And this one, if you look at the yield here, this has a sustainable yield. They have a 6.2% dividend yield, and the payout ratio is only a 65%. And that's true. That's a safe 60% payout ratio. But here's the thing with some of these super high yielding stocks. If we look at Verizon, did you know that Verizon is actually lower than they were in 1998? So if you bought the stock price in 1998 was, the same price that it is today. So you're basically buying this to maximize your dividend income. You shouldn't really see the stock price go up in the long run. But yeah, you might maximize your income. Should I only invest in Robinhood, or should I do more? Yeah, hey, TV1, there's no burden of having multiple brokerages. Like, it's literally just an extra filled out 1099 form at the end of the year. That's super easy. So yeah, I have a Robinhood account. I have a Webull account, and I have different goals with each portfolio. It's kind of like psychologically cool. Like if you look in the top left, I call this one my buy and never sell portfolio. Once I buy a stock in here, I try to never sell a stock. And if you look at this account right here in the top left, it's called my dividend only account because every stock in here pays a dividend, which is pretty cool. So yeah. What stock should I buy? Hey, I like the S&P 500 and then the top S&P 500 companies. Like invest in what you use, like Amazon, Google, Meta, McDonald's, whatever. Uber, maybe. Hey, Robert said Uber. Let's do Uber stock. And hey, remind me to look at Salesforce. I forgot to get to Salesforce. And yeah, Lucas, remind me. So here's Uber right here. This stock is at an all-time high. This is pretty close to it. They deserve it as well. They print money. We can see their active users here. This is a cool metric, actually. Monthly active consumers. So actually, that's a distinctive metric I like. So people are actually consuming and using their product. It's at 180 million this month. Same time last year, it was at 156 million. So there's a lot of new users on Uber, apparently. Like, even though COVID's over, they're still growing. If you look at their main mobility business, the growth is insane. It's up 20% after 25, after 37. And they also have their delivery business. So Uber Eats, that's 32% of the business. And it's also just at a record. I mean, that's nuts. It's up 25. So, and they're not just growing their revenue, but they're making real profits. If we go to FCF, which stands for free cash flow, this is insane. This is how Uber is able to buy $1 billion of cars from Lucid and take stakes in the Grab and some of these other stocks. They make, and they don't have to pay a dividend. Like, this is insane. They're doing $2 billion plus of free cash flow a quarter, and those growth rates are insane. And not just free cash flow, but also GAAP net income, after tax net income. They're doing $1 to $2 billion in net income a quarter. This quarter, when it says it was $6.9 billion, that was actually a small one-time adjustment. So they didn't actually make that much, but still, they're really profitable. I love Uber. Perfect buy, never sell stock. What app is this? Yeah, hey, JP, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a Brokerage. So let's look at Salesforce right here. This is one of the companies that also have been being hurt by the AI thesis. They also rely heavily on the white-collar job market. So Salesforce, they're saying like agentic AI or whatever could hurt Salesforce in the long run. So they have to lower the multiple, and that's what's being kind of priced in. The multiple is pretty fair now historically for Salesforce. They're trading at 35 times net income. Look at how diversified that they are. They own some great assets like what's it called? Slack. Amazon uses Slack. So many S&P 500 companies use Slack. I mean, they're in services, sales, platform and other, integration, analytics, marketing, commerce. They're super net income positive. I mean, they're doing, especially from what they used to be. So here's their net income now. Look at it just like it used to be nothing. 2023 barely making any profits, but now they've really like narrowed down on their margins. So and it's up 32% year over year. So they're making $2 billion in net income a quarter. The free cash flows, well, it's down 20%, but it's really their fiscal year Q1, but that they make all their money. So Salesforce, I do like. They're shareholder friendly as well. You now get a dividend, 0.7% yield. They do share buybacks. I'm sure they're going to be doing a lot more share buybacks now. They're also doing M&A. They just acquired INFA. Like they acquired Slack a couple years ago. They just bought INFA. That's why the stock looks really flat. If you ever see a stock and it like looks like this, it means they just got acquired by someone. So all of this company's revenue right here, 100% of it, if we go to their revenue right here, 400 mil a quarter, all of this is now going to be added to Salesforce stock. Pretty cool. So let's look at Circle here. My bad there, Wealth. I forgot to get to that one. So here's Circle. This is your stablecoin play. We've had some favorable executive orders like the Genius Act around stablecoins. This is the company that owns USDC. It's like a stable coin, if anyone's heard of that. It's like pegged to the dollar, but this is a company that owns and operates it. They're actually doing great. Like the revenue is up 53% year over year. Last quarter was up 58%. So they're extremely growthy, and they're also net income positive. This was their IPO fee. This wasn't real. They didn't really, like the core operation business didn't really lose that. It was the fee, but the previous quarter is like 65 million of positive net income plus 32 mil, 50 mil. This is a company that was a one-time adjustment. So I like Circle. I worded that weird. Bitcoin just made me a millionaire today. Hey, no way, dude. That's awesome. How many, wait, whoa. Let's see here. Yeah, this is a stock. It's seen some momentum recently. Yeah, look at that. But unfortunately, they just burn through money. Like, you're not going to believe the net income they lose. So if we scroll out to the weekly here, look at this decline. I mean, that's pretty sad. So, but they deserve it, unfortunately. So if we look at the top right here, they're a $1.85 billion company. So remember that in the back of your head. The whole company is worth $1.85 billion. I mean, you can't make this up. They lost $1.3 billion of net income this quarter. $800 million last quarter. This isn't something like that's real money. That money has to come from somewhere. Look what that did to their balance sheet. That's so sad. I mean, their assets depleted from 4.2 to 3.4, and then to 2. So I feel bad for anyone in TLRY stock. There's a lot of momentum right now. Like in all these net income losses, like lost 1.2 billion, and the revenues declined year over year. I think this is a pure momentum play. You don't buy and hold that one for the long run. You swing trade it. It's an industry I don't think it's too investable in the long run. So yeah, I'd just be careful. Okay, RZLV. Oh, wait, actually, Isaiah said Eli Lilly. I wanted to look at Eli Lilly. Then we'll get to Resolve AI. What up, Improvement? What do you think of MicroStrategy? Yeah, MicroStrategy is pretty not good. That's a dividend play. So yeah, hey, look at that. This app is telling me that there is a bullish continuation triangle and the rise probability is 80%. So anyway, there was some favorable regulation toward some of the prescription companies. Like there was a deal with Pfizer and stuff, and the stock's been up on that. Here's what I love about Eli Lilly, and this is like, it's a never sell stock. It really is. They have, what app is this? Yeah, hey, if you want to get this app is in the link tree in my bio, the very first link there. It's a brokerage, but look at this right here. They sell a bunch of prescriptions. I like how we get this breakdown here. Look at this. Their largest prescription, Mounjaro, is growing tremendously. It's up 112% after going 200%. I mean, they created this in 2022. The sales were 16 million, and ever since then, there is no negative growth. It only grows up. Like, it's insane. And it's not just that business as well. They also are now getting into the weight loss industry. We've heard of Ozempic, Wegovy. Well, Eli Lilly just created Zepbound. It's their largest, or it's Ozempic's largest competitor, and it's booming. Created this in 2023. It was 175 mil. Now it's 2.3 billion. Like, they literally just create these prescriptions and they just sell. And they're so diversified as well. It's not like it's all just one thing. Like other oncology, what is that revenue? Look at that. So anyway, and it's not just, revenue, but real profits. But real profits as well. Oh my goodness. There we go. Net income is insane. It's up 90% year over year. Really look at operating profit. It's way more consistent. You get a 0.67% dividend yield. The payout ratio is much, much, much lower because they had some one-time adjustments from some acquisitions and stuff. Because they're really making 45 bill a quarter. It says only 900 mil. It was way better. Anyway, Eli Lilly's a beast. Never sell them. I love them. Okay. Hey, what up, B-Dub? He said, there's no reason it should be going up. Get ready. Wait, what stock are you talking about there? What's up, dude? If we all spam RGTI, maybe he'll look at it. Here's the thing. Congrats to anyone holding this stock because the momentum is insane. This is the market. This is the time to be in this stock. Yeah, hey, Andrew, this app is in the link tree in my bio, the first link there. It's a brokerage, but I can't pay this multiple. Like look in the top right, the market cap. I know so many $12 billion companies. This company is worth $12.7 billion. All right. I know many $12.7 billion companies. This is what you're buying. I mean, it can't get more bubbly than this, I hope. Like the future growth you're paying is nuts. And so anyway, the revenue is 1.8 million. Like the revenue is down 41%. You're paying $12.6 billion for a company doing $1 million in revenue a quarter, and it's declining. It's down 41%, down 51%. And they're burning through 20 million net income a quarter. So it's just tough. It's tough to trust this company. I mean, I don't know who's buying this stuff, but it's worked great right now. The momentum is crazy, but I don't think anyone who's buying the stock really goes and looks at the financials. So in my opinion, here's the thing. I like buying companies that have momentum and are also paired with good growing fundamentals. So that's one that I would just stay away from. Just from a financial point of view, it's strictly math and numbers. I mean, $12 billion company, $1 million in revenue a quarter. It's tough. Hopefully you could understand me there. So sorry. Not trying to bag on anyone's stock, of course, but the momentum's crazy on this. Okay, so let's see. What was the name of the company for weight loss medicine? Well, there's Novo Nordisk, ticker symbol NVO. The company that I was just looking at was Eli Lilly, ticker symbol LLY. That was the company with Zepbound. But the main weight loss prescription company, which has been struggling because they actually lose their exclusivity for Ozempic in 2 years. This is the company that owns Ozempic. Elon Musk is on Ozempic. They also own Wegovy. This is a pure weight loss play. Literally 92% of this company's revenue comes from their diabetes and obesity care products. So that's pretty interesting. But yeah, they also print money, but the future uncertainty here, they're making $4 billion net income a quarter. APH long-term looks great. Yeah, dude, trust the word. Dude, I completely agree. the industry they're in, like this cable business, is literally expected to CAGR at like 25% plus till 2030, especially with the M&A they're doing with CommScope and Textron. Like, this is the company supplying right now, and this is just one little part of their business. They're supplying NVIDIA with their copper cables. Huge copper company. NVIDIA has this new NVLink spine product, ordering that from Amphenol. They use 2 miles of copper cables in this little box. Is Robinhood better than Coinbase? Well, that's a crypto brokerage. You can't buy stocks in there. But I actually, honestly, I would say Robinhood is better than Coinbase because you can buy crypto on Robinhood. So yeah, actually, I think you can stake on here too. Whoa, the looks like crypto's fallen a little bit, but yeah, I do like Robinhood. Yeah, if you want to get Robinhood, it's in the link tree in my bio as well. If you want to use my affiliate link. Also, this app is great for crypto as well. Same thing with this. This is my favorite app right here. All the apps I'm using are in the link tree in my bio. They're brokerages. Yo, you got to 25K in your account. Congrats. Yeah, hey, Shaked. Yes, sir. For the first time ever in this account. I got to 12K. Yo, that's great, man. My son wants to sell Coinbase and get Robinhood. Oh, the stock. Well, it's tough buying Robinhood at this price. Robinhood is actually my best performing stock of all time. I am up over 10x on Robinhood. My first ever stock to 10x. And also, my biggest regret ever, I have 5 shares. I sold 50 of them at 36. It was my biggest regret. But anyway, this is insane. I certainly wouldn't buy Robinhood today, but they deserve the momentum. SoFi as well is another cool one. We got some. Oh, hey, guys, newest stock, by the way, I've bought, which certainly would not buy. Like, you nibble on this position. It's so overvalued. It's even more overvalued than Palantir and some other ridiculous, but I still bought a share. So there's Axon. That's my newest position. Body cam police software company. How are you so knowledgeable? Hey, I'm definitely not. I'm not an expert, of course. By the way, I sell nothing. I have no course, book, none of that. So I'm just on here give my opinion. But I've watched a lot of YouTube videos. But I've been investing since before I turned 18. What's this app? I don't see your link tree. Wait, is there no link tree in my bio? Yeah. Hey, by the way, if you want to get this app, I'm on. Yeah, Fab said if you go to the link tree in my bio, it's the very first link in there. Is there really not a link tree in my bio? Does someone mind double checking that for me? Because that'd be not good if it was there. But yeah. Anyway. Okay. They do all the body cams for UK police. Oh, hey, S, thank you. Oh, there is one. Okay, cool, Jello. Thanks. I appreciate that. Hey, no way, yo. Shout out to Ron on the YouTube. He just donated 25. I don't know what currency that is. 25 RON. It's for a coffee. Dude, Ron, thank you so much, my friend. I hope you're having a great day. If you got a stock you want me to look at, let me know, Maddie. Yeah, hey, best way to support me is just watch the stream from YouTube. I'm trying to build up my audience there. And yo, thanks again for that super chat. And hey, Joel, I've been doing really good. How about you? 22nd Century, is that a stock? So RZLV, yeah, let's look at Resolve AI. I believe this is just another startup. But hey, Shaked, thanks for all the roses there. For the let them cook, I do appreciate that. So Resolve AI right here is, let's check the revenue. And well, actually for the first half of this year, the revenue was 6 million. So at least there is revenue, but 6 million isn't much. Balance sheet isn't great. More liabilities than assets. Wow, lost 170 million for the full year 2024. So are there expectations? So we do get analyst expectations. Looks like they're expecting 16 mil of revenue. That's actually going to be a big increase. But again, I'd be so careful with this name. Is there any? I got to do more research on this one. It looks really overvalued, to be honest with you. I don't even know if they're American either. Like, they're reporting in halves. They might not be American. So, Nathan, where are you? Hey, I'm here. What's up? So, see, I'm on YouTube and TikTok. These are my only accounts. Do you do this full time or no? Hey, I wish. No, I'm a college student. I'm at college right now. So anyway, here's Calmain right here. This is the chicken egg company. I do own this one, so I am down on them too. Check this out right here. We are down 8% on Calmain, but this is your main chicken egg play. I kid you not. This company sells chicken eggs, and you get a crazy yield, a 9% dividend. But the dividend does change every quarter. Do beware. It's like $1.37, $2.30. It's basically based off how much money they're making. So we've seen right now the price of eggs are insanely high. We're expecting it to normalize, so we do expect the net income to go down in the future. But here's the insane thing about this stock and why I love them, not financial advice. Again, they just sell commodity chicken eggs, but the whole company is worth $4.5 billion. Remember that whole entire company is worth $4.5 billion. They literally have $1.3 billion in cash and no debt at all. No debt on the books. So literally 25, 30% of the entire market cap of what you're paying is just their cash on hand. And then here's what you get after that. You're getting a business that's making a couple $100 million in net income a quarter. So conventional shell egg sales, with some of the burning downs of some chicken farms and commodity inflation and everything, they've had a lot of pricing power right now. So that's your chicken egg play. Pretty cool. Is S&P 500 overbought? Probably. But I expect I'm trading America in the long run. That one should just continue to climb up higher. Is this a good long term, or would you say like 45-day sell? I don't know. I'm now up 12%, although it was a high price. Going to more. Hey, nice, Joel. Hey, what up, Marcos? How's it going? So IDK said CEVA. So, we'll look at Simmons after here. We have their equipment on our house. We have like their switchgear boxes outside. We have the Simmons one. Anyway, here's CEVA. What up, Marcos? And what up, IDK? Let's check this stock out right here. It looks very small. They're only worth $680 million. So beware, that's an extremely small company. But let's go look at their numbers here. So half the revenue comes from China, 20% Asia, then only 18% United States. But it looks like they licensed their intellectual property. So that must be high margin. What are the gross margins? 86% gross margins. Do they have net margins though? So they still lose net income. That's the weird part. So so the revenue's down by 10% year over year. Revenue's down by 10. The net income is negative. So luckily they have a phenomenal balance sheet. That's a great balance sheet. 158 million of cash, no debt. That's 25% of them, or 20% of the market cap, which is their cash on hand. So that's the good news. 20% of the market cap of their, so they have 200 million of cash. They're barely losing any money, losing 3 mil a quarter. So, but I think investors want to see the growth come back, like negative 10% year over year. Not great. So SIE, let me type it in. Simmons. So here's this stock right here. This is Simmons Electricity. They're at an all-time high. Wow. That's really good. And hey, this app is telling me this isn't an American company, but that's okay. Let's see. There is a bullish continuation triangle, and it says the rise probability is 90%. What website is this? Yeah, hey, it's in the link tree in my bio, the very first link there. It's actually a brokerage where you buy stocks on if you want to get this app. But yeah, Simmons, you get a 2% dividend yield, even though the stock is at an all-time high. That's pretty crazy. So if we go to the revenue, 31% comes from Europe, 26% US. So yeah, smart infrastructure, Simmons Healthineers. I don't know what that is. Digital industries, mobility. So anyway, let's go to the net income here. They're making, and this is in USD, they're making legit 2.5 to 4 billion in net income a quarter. These growth rates are insane. They're expanding margins. Yeah. Wow. 21% net margin that quarter. So dude, Simmons is a good, fundamentally sound company with a good dividend. I can see why they're at all-time highs. Hey, thanks again, Maddie, for the super chat. I really appreciate that. So Adventure said SKYW. Is that Skyworks? Or no, this is SkyWest. Okay, so this might be an airline. I don't know, but let's go look at their financials here. Yeah, I'm guessing it's an airline because of how, yep. So SkyWest Airlines and SkyWest Charter. Well, it's growing very nicely, up 22% after growing 21%. 100% of the revenue comes from the US. So yeah, look, so the orange line is what the analysts expect. Check out how they're beating on expectations. Huge beat on revenue, huge beat on net income, and huge beat on EBIT every quarter. This is really good. This is one of the best well-run airlines out there. They're doing better than all the other airlines. Wow. Revenue's up 20. I don't know how they pull this off. Let me see. If we go to Delta Airline, United Airlines, Spirit Airlines went bankrupt, they don't have as quality. This is probably the best airline I've seen out of all of them. What's this app called? Yeah, hey, by the way, this is where you buy stocks on. It's called a brokerage. If you want to get it, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. Give me 1 second. I have to go grab my water. I'm so sorry. Actually, let me switch. Ow. Let me switch this to Robinhood real quick so we can see how the market's doing. It might turn off. I literally just need 30 seconds to go grab my water. But maybe I can leave this up, or I don't know. Let's just give me 1 second. Okay, we made it. Okay, so sorry. Okay, sorry, we're back. I'm gonna be streaming for another probably hour, so we're chilling. We got another hour. Okay. Sorry. How's the market doing right now? Hey, thanks for everyone. Yeah, by the way, we stream every single day. If you want to hit the follow button, I sell nothing, no course book. I ran, man. I'm out of breath now. Oh my gosh. Okay, Joel said thoughts on ASTS Space Mobile. Now, this is a company that has a bright future, but I think it's tough to pay for it now. If you are in this stock, the next 6 months are going to be super volatile. I like Rocket Lab, but check out the analyst expectations. Man, let me drink this water now. Hold on. Okay, so if we go to the revenue right now, this is basically a startup. They have no revenue. They're doing $1 million in revenue a quarter. Nothing. I think it's pre-recorded. Yo, this is not pre-recorded. You can see the time in the top left, or there's many ways. Okay, anyway, but look at the analyst expectations. They're doing $1 million in revenue a quarter, but next quarter they're expecting 24 million and then 32 million. The analyst expectations are insane. So that's why I think that stock's at all-time high. I regret selling Alibaba. Now it's skyrocketing. Dude, Alibaba's only skyrocketing because they're announcing like they're getting into chips. Hey, watch out for that guy in chat. Hey, whoa. Let me mute that and block that person. Hey, ban that person. There's people impersonating me in chat and trying to watch out for. Hey, I sell nothing, by the way, guys. I have no course book. I'll never follow you. I'll never DM you. I don't have a course book, WhatsApp, Telegram, literally none of that. So anyway. GM stock. So this is General Motors. This just isn't a quality company. I just don't see it outperforming in the long run, but it's a lot better buy than Ford, in my opinion, if you just wanted exposure to this industry. You're also buying it for the dividend and a little bit of share buybacks, but check this out right here. You get in your, I like that the dividend's so low. They have a lot of room to raise it, but you get a 1% yield, really low payout ratio. But yeah, they just sell a commodity, cars. And look at this net, first off, this isn't good. The revenue's down 1% year over year. It's just not going to be a high, law of large numbers. Is it possible for them to double this to 100 billion a quarter? It's going to be tough. But yeah, the really low margin business. Yeah, the real profits, if we look at net income, there's some one-time adjustments, but underlying business, the profits are down by 45% year over year after revenue fell by 1. That's tough, but good news, they're still making, 2 to 3 bill a quarter, but I don't see GM outperforming, but they do have a safe dividend. I think they're even doing insane share buybacks right now too, but they're making good money. You need to charge your phone. Oh, dude, you're right. Thanks for that. Yeah. Home Depot. Yeah. Hey, this one's kind of interest rate sensitive. As we go into a lower rate environment, I think people will spend more on their houses as they look like they see it as an investment, which is pretty interesting. So check this out right here. Home Depot. I believe this is a nice dividend growth company because look at the dividend you get, a 2.3% yield, and it grows. In 2021, you got paid $6 a year. Now it's $9 a year. So you get nice dividend growth and the PE's fair. They trade at 26 times net income. And look at the profits they're making. They're legit making 3 to 4 billion of after-tax net income a quarter. Pretty insane on Home Depot. So the revenue does look a little rough right now just because residential housing sales and the high rates have really hurt their business. But the growth should come back as we go into a low rate environment. Should be a nice tailwind. What's the best ETF right now? I like QQQM. This is called the NASDAQ 100. It's the same thing as the QQQ, but with a lower expense ratio. It's basically just a tech-heavy fund. You know, it's in all the tech names everyone loves. NVIDIA, Microsoft, Apple, Broadcom, Amazon, Meta, Google, Netflix. So, you see people are dogging on Netflix subscriptions right now for some reason. I didn't look into it, but anyone see that? Or like Elon Musk was saying, I don't even know. So yeah, that's a cool ETF. What do you think of Jeppy? Jeppy's a covered call ETF. So you buy that to maximize your income. Can't outperform just from the nature of it. Adrian said QBTS. Yo, hey, dude, the quantum names. This is insane. Like, I've just been wrong about this one. Like, this is insane, yo. You got to get a lot of... You got balls, in my opinion, to hold this stock. If you like, this is insane. They're an $11 billion company. So this whole entire company is worth $11 billion. And I know a lot of $11 billion names. And the business did $3 million of revenue, 15 mil last quarter, 3 mil. You don't look at the financials for these kind of stocks, really. You just look at the moment. So nice. I'd stay away, but I've always been wrong about staying away from these. Like, it's all the quantum stocks. Today, with the market being at all-time highs, like, that's the small caps, the momentum names do great, like abnormally good, more than anyone thinks. Pull up LITOF. I typed in LITOF. I can't find that one. High grade lithium. If you give me the name, I can probably find it. The Wealth Shift. He said FDVV stock. Fidelity Core Dividend ETF. So, I love that they're at an all-time high right now. So that's great news. What's the dividend? So this looks like a better alternative to SCHD. It's performed much better. So you get a 3% yield. Let's go again. This is an ETF. It just owns a basket of stocks. And here's the stocks that it owns. 6% in NVIDIA. And then, look at that. JP Morgan is 2.75%. This has a really nice dividend yield, and they're at all-time highs. They got Visa, PM, ExxonMobil, MO. So I actually really like this ETF right here. It honestly might probably better than SCHD in terms of total perform. Is SCHG better than QQQM? Is that another NASDAQ 100? This is the U.S. large cap ETF. They probably perform very similarly. The top 10 holdings are nearly identical. So should both perform very well. Frontier Lithium. Yeah, I couldn't. Frontier. Let me see if I can find that one for you. Frontier Lithium. Or is it ticker symbol? Wait, it's just FL. This 150. I don't think this is the one you're talking about. But shareholder Mitsubishi on 7.5. I'm not seeing that. I don't know if this is it, but this one's kind of at an all-time low right now, and it's not even available on my exchange. So I'd be careful with that one. Yo, no way. Dante, bro, with like the 20 roses, dude. Thanks so much, Dante. If you got a stock you want me to look at, let me know. What do you think of gold as a whole? I just got into the 3x leverage ETF. Well, do know, no matter, I'm about to say some strict math right here. All triple leverage ETFs, no matter the asset, always spiral to zero because of the nature of the leverage of not being able to recover the money at the same rate you lost it. So no matter what 3x leverage ETF it is out there, they all permanently go to zero and permanently reverse split. So you must have whenever you buy these, you got to keep it. I mean, just look, I can't believe this. So it's just math. But you got to have a plan to get out of this name if you're in a 3x leverage ETF. So yeah, anyway, they just reverse split and keep on going to zero with the 3x leverage. Just math, but you could make money. But yeah, what do you think of gold as a whole? I think gold is very interesting. I mean, it's at all-time highs, to be honest with you. The risk reward doesn't look great, just like buying gold right now. So, because it's literally at all-time highs, but gold does great in war fear environment, if currency fear, inflation, like economy fears, like gold does good in those environments. It's like a safe haven asset. So, yeah. That probably wasn't too helpful. But I'd be careful with 3x leverage. Let's see. Trilith, Lithium or Trilithium or wait, I couldn't find that one. Um, FDVV management fee and expense ratio is more expensive than OCHD. Yeah, that probably is true. Um, uh, okay, let's keep going here. You weren't lying about Moomoo just got. Oh, hey, yeah, Rook. That's awesome, man. Hey, thanks for using my link there. Yeah, hey, if you want to get this app I'm on, it's in Linktree in my bio. First link there. You get, well, we'll both get like a fractional share of NVIDIA if you sign up. Pretty cool. So someone said, yeah, these are some great names here. I don't know which one to look at. I've been seeing a lot of HOND. What is HOND? Oh, this is some acquisition company. I forget what they did. They bought some like crypto. Can someone tell me what they bought? Like these holding companies, blank check companies just buy other companies. I don't know if there was some crypto thing. I don't know. So Quebec said IONQ and Nebius. Yo, I know Amazon owns like 100 million of IONQ. They used their dude. IONQ did something smart. They took advantage of the momentum, diluted the shareholder by $1 billion, but bought $1 billion asset, and the stock reacted good to that news. Probably one of the better quantum names out there, just because they have real assets, unlike RGTI and Qubits does a little bit. Oh, remind me to look at FT&T, and what stock was I just going to look at there? I forgot. Nebius. Yeah, hey, Nebius. This is in the NVIDIA portfolio. This is Nebius just got a huge partnership with Microsoft, and that's the reason they gapped up on this day right here and have just been up ever since. You know, this is the best partner to have. They literally got a $19.4 billion AI computing deal with Microsoft. You know, second largest company in the world. That's a great partnership to go into. And, you know, I don't just buy a company because they got a partnership or because NVIDIA owns them. I want to judge them off their financials, and this looks amazing, man. Look at this. I mean, the revenue went from 14 mil to 100 million year over year. That's insane, the growth. And they're, especially with this new Microsoft deal, I think they're going to beat these expectations. But revenue was 105 mil record this quarter. It's supposed to be 264 mil in 2 quarters. So they're just super growthy. And high growth stocks deserve, you know, stock go up. Thoughts on 2x leverage stocks? Yeah, that one's a slower bleed. TSLL, I've dabbled in this one before. I like it for like a cheaper version to do options on. I like the 2x ones because you can do options on these much cheaper. Like if you want to do, sometimes I like the small YOLO little option contracts, which I haven't done in a long time, over a year. But I buy little contracts on TSLL versus Tesla because it's so much cheaper. You can spend like $50 on one option, and what app are you using? Yeah, hey, social, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. All the apps I'm using are in the link tree in my bio. I got Robinhood as well. Not sure which one you're talking about. Wow, new all-time high ever in this portfolio, new intraday high, just barely, so that's great news. Webull as well. I just bought Axon. We're up 1% on them. Super overvalued company. But anyway, yeah, out of all the apps, though, this one is my favorite, most useful. That's why we've just basically been doing analysis on this one. Yeah, link tree in bio, first link, or any of them. So would you buy Nebius? I would, but not at this price. Nebius looks pretty rough. So Joel said RGTI's EPS is growing. So that's actually not true. They're tricking you. So if we go to the net income right here on this company, it says, like, first off, it's kind of obvious. If you go to the revenue, they're doing $1 million in revenue a quarter. How in the world did they make $42 million in net income? They didn't. You go to the operating profit, which is the core underlying business without those GAAP net income tricks, they're actually losing $20 million in net income a quarter. So sometimes you'll see companies have this, like Tesla does it all the time, dude, to make their net income and EPS look higher than it actually is. In one quarter, Tesla lost money, but because of like a Bitcoin sale, like a realized sale of like something of like Dogecoin, like it made their net income look positive. Like there's so much, you always got to blend numbers together, in my opinion. So anyway, yeah, they've been able to issue shares and fortify their balance sheet, which is good. But I'd just be careful with Riggedy, just because they're revenueless. Have you ever bought any military stocks? And if not, are you interested? Not really. I mean, Palantir is kind of a contract one. I don't really have any defense stocks, and that's what I kind of lack in my portfolio. Axon, kinda. Yeah, I don't have much like security. Hey, Adrian, thanks, man. I appreciate that. So Dragonfly Energy, I heard about that one. What's that ticker symbol again? I don't know. And I need to go get my charger because my phone's getting low. FT&T, yeah, let's look at the cybersecurity name. This is a lot of software is getting hurt by AI. the white collar job, Salesforce and HubSpot and Adobe as well. Adobe's getting hurt by the AI thesis. But one thing I think is a bit immune from the AI thesis in software is cybersecurity. As AI gets better, being able to hack will get better and more automated. So we're always going to need cybersecurity. A good chunk of the S&P 500 uses their software and their subscription model play. 40% of the revenue comes from their subscription. I love subscription model businesses. It's so predictable, it's reoccurring, and it's super growthy. That's what I love about this one. If we look at the annual revenue, it literally just hits a new record every year, every quarter. And it's not just like the growing revenue; they're making real profits. If we go to the net income, after tax net income, they're making $400 to $500 million net income a quarter. So if you're looking for a cybersecurity play, FT&T is a cool one that I trust. PanW, Palo Alto Networks is another good one. CrowdStrike's a good one. So yeah, all right, we got the charger here. Let's see. Hopefully this doesn't. There we go. All right, let me plug this in. All right. So how about ASML? Yeah, let's get to ASML. This is the lithography company making the chip making devices for Nvidia, Intel, and Samsung. They basically, those are their only customers. Like they have 3 customers, and it's Intel, Samsung, and Nvidia. And their stuff is so valuable. The Chinese are trying to steal their machines, but the U.S. Army literally came in and defended ASML. Like the Chinese stole a $400 million machine from them, and they were trying to reverse engineer it, but they're so complicated that they literally can't. This is such a fascinating company. But yeah, you get a nice dividend. They are European, so you got to convert their currency from European to USD because that's a reporting company. So this is in USD. Check this out right here. If we go to the revenue, this is why I like them. They're the most justifiable. Like I was expecting the stock to kind of trend back towards all-time highs. And I've been saying this for a while because they just had a record great quarter. The revenue was up 35. So revenue's up 35. But net income is up by 86. They have insane margins, expanding margins. Net margin went from 25 to 35. Like think about that. To able to grow their margin by 10%. Like if Coca-Cola, like they sell 1 million cans of Coke a day, if they can make an extra cent on each one, like the margin is crazy. The margin expansion is really impressive. You want to look at that on companies too. So yeah, they had the most profitable quarter ever. I do like this company. AI company. What's this app? Yeah, hey, Jack, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So it's where you buy stocks on. I have 10K going into an account today. What should I put it into? Hey, what up, Candy? So, first off, I just like the S&P 500. I'd keep that as the backbone of your portfolio. But then after I buy that, like I play around with some individual companies that love and use. Like, and after you own them, you'll want to use them more. Like, it's kind of cool. Like, if you like being on Instagram and Facebook and Threads, buy Meta stock. You like YouTube, buy Google, McDonald's. I got 17 shares of McDonald's. Our utility bill is through Constellation Energy, our natural gas bill. So I own some them. I own some more too. Like if you use Amazon, I got Amazon stock, Coca-Cola. Like invest in what you know and check out their financials too. So those are all the stocks that I own. Like I like those companies. So I'm not just saying that. Like I actually own all those companies. I own Google, Meta, Amazon, all these companies. So I think they're worth looking into. Again, not financial advice, but ASML is more of a moat than TSM. I actually agree with that, Javone. Well, TSM, their problem, NVIDIA is going to have to move some of their manufacturing away from Taiwan Semi. If you guys didn't know, NVIDIA just designs the chips. Taiwan Semi actually manufactures them, and it's tough because they're 6 feet away from China. We can't defend them. We got to be more independent. So that's why NVIDIA and the U.S. government took a stake in Intel to bring that manufacturing back. And NVIDIA is now going to move some of their manufacturing of their older, like GTX 1080 series to Intel, or maybe some of their CPUs or something. But anyway, NVIDIA is a beast. Great stock. I think they're a buy, never sell stock, but I will say the risk reward, like law of large numbers is starting to hurt on them. If we look at the top right, the market cap, they're a $4.5 trillion company. If you buy them today, for you to double your money, they legit have to be worth $9 trillion. They have to be worth $9 trillion for you to double your money. So it is tough, but this is a great company. We can see their PC GPU market share. Yeah, hey, Long John Silver. Yeah, if you want to get this app I'm on, again, it's where you buy stocks. It's in the link tree in my bio, the very first link there. It's called a brokerage. But check this out. Huge market share. Obviously, we know that. They have this automotive software that Lucid uses it. It's almost like it's a real competitor to Tesla almost, this automotive software that anyone can license from them. It's basically open source, but pay NVIDIA a little bit of money and anyone can use it. But yeah, mainly though, this is a data center play. It's their highest margin business. Data centers need GPUs, and NVIDIA makes their own GPUs, the best ones out there, so they can supply them to their own data centers at the cheapest cost and the newest models the quickest. So pretty insane. Like if they like imagine they just mined Bitcoin on their own GPUs that they got for a fraction of the cost than anyone else. Anyway, if we look at the net income too, this is the nuts part, the margins. If we look at the revenue, it's 46 billion. Out of that 46 billion of revenue, legit 26 billion of it was after tax net income. That's insane. So yeah, 56% net margin. You go spend $100 on an NVIDIA chip, $56 of it is after tax net income for them to keep. Pretty cool. Hey Jello, what's up? Said thoughts on Dutch Bros stock. Let's do it. Bro, I'm Indian. Hey, try not to spam there. What's up, man? Holding FANG ETF. It's up 52%. What's your view on FANG? Yo, they remember FANG the N used to stand for Netflix instead of NVIDIA. Oh, and then Meta used to be Facebook. So yeah, the FANG acronym's kind of lost now, but yeah, now it's just Mag7. But yeah, I do like the FANG. They're all great companies. So here's Dutch Bros right here. One reason I think this stock is falling is just because the whole industry is. You look at Starbucks. Dutch Bros I think is the better buy than Starbucks though. But they're just following the trend of the industry right now is why they're declining. So let's go look at their numbers right here. I like them for their franchise business. They first off, 91% of the stores are company owned. McDonald's is slowly shifting away from that because this is the low margin business. The low margin business is the company operated shops. The high margin business, like what's their net margin? Yeah, 9%. McDonald's is a 30% because of their franchise revenue. And I like that this is growing. It's at a new record. If you go spend, I think $100 at any Dutch Bros, $5 of it goes back to this stock as like a franchise royalty. So pretty cool. That's their high margin revenue that they collect. So pretty cool. They are making net income every quarter, much better than Starbucks. They actually have double the margin of Starbucks the most recent quarter. Let's see. Here's the thing. I'd much rather buy Dutch Bros than Starbucks, and I really mean that. I literally think Dutch Bros is safer than Starbucks right now just because of the dividend. Actually, Starbucks is closing down. They made a big deal about it. They're closing like 100 stores. No big deal, but yeah, if we look at Starbucks' net income right here, look at that decline. It went from $1 billion to $500 million. And that's not some one-time adjustment either. Like that was a real just loss of the margin. So it's tough. I like Dutch Bros more. Hey, what up, German? Good to see you, friend. Hope you're having a great day. So FANG ETF, it's called MA FANG. I don't think I'm going to be able to view that one, unfortunately. Yeah, tough. So someone said Comcast. This is their main business, their residential connectivity business is literally just going to decline by single digits for the rest of time, which is unfortunate. So here's the thing. That's the huge elephant in the room, permanent headwind for Comcast. Their main business is just going to slowly go to zero. Their residential and connectivity business just going to slowly decline by single digits year over year. But we hope they can grow these other businesses. Like they're in the media business. Like they own Universal Studios, which owns like Despicable Me and a bunch of different movies and stuff. They own theme parks, like that thing next to Disney World. Comcast owns it. So they are in some theme parks as well. They print money, dude. They make roughly, we'll call it 4.8 billion of after-tax net income a quarter. And check this out. What are they doing with all that money? Oh, they actually, wait. Look at the dividend. The dividend only cost 1.24 billion. They have so much room to raise their dividend. They could, double it. But I want to see this company really invest in the future. And actually, it looks like I want to see them do M&A or something. Yeah, actually, they've bought back like a lot of their company the past year. They have a nice dividend. They have a great dividend, but you got to be careful of that. That's why I think the stock has been struggling. I thought Starbucks was closing 450 stores. You're probably right. I just said 100 because I wasn't confident in that number. I knew they were closing some stores. I didn't know the exact number, but yeah, thanks for that. Tim Hortons is better. What's the ticker symbol for that stock? I wonder. So, okay. What do you think of AVAV? Is that Aero Environment? I'm up 25% this week. Well, hey, that's great. Yeah, I like this company. They're on my watch list right here. Yeah, in my opinion, they deserve to be at this all-time high level. They're still a small company. Like, you don't really want to have this. Actually, no, they're not. I'm stupid. This is a $19 billion company. Let me go look at their fundamentals again. So, autonomous systems is up 50% year over year. Well, let's see. Revenue, wow, it grew 140% year over year. Look at that balance sheet. Like, did they just buy a company? They did. So if you go to cash from investing activities, they just spent $900 million buying a company. So that's why their assets just spiraled up. So the reason they lost net income, I was guessing because of the um adjustment. But that explains why the growth was so crazy high because they just bought a company. Pretty interesting. That's Aero Environment. So they're in space, cyber, and directed energy. Huh. Pretty cool. Let's see what happens with that acquisition. Maybe it's synergistic. ETR, I saw news they have a partnership with Google compared to CEG. So this, I wonder if I asked the Moomoo AI if this company owns any nuclear reactors. It might just be a completely different business than Constellation Energy. But let's see. Yeah, dude. First off, that's insane. The stock price, they're at all-time highs. So they're I'm guessing unregulated utility. Um, let's see here. Yeah. Oh wait, no, they're a regulated utility, and they did natural gas. Maybe they're just a natural gas. I don't know. Let's just go look at that at the revenue right here. So the revenue's up 12. Yeah, they're making good money, like a couple hundred million in net income a quarter, 2.5% dividend yield. You should look up for me if they own any nuclear reactors. Like I could just ask the Moomoo AI right here. Does this stock own any nuclear reactors? Uh, what is flash? Does that mean it'll hopefully answer quickly? Because I don't want to spend much time waiting for this answer. Yeah, okay, we might just exit out of that. Hopefully it'll be there when we get back. Does it still load? No, it doesn't. Well, oh, whatever. Okay, energy is nuclear. Dude, I love nuclear energy. The number one purest play for nuclear energy, and the one that I've chosen because I've looked at all the nuclear reactors out there, is CEG. There's a lot of hype around right now about these small modular reactors. They're called SMRs, small modular reactors. That's still a proof of concept. Did you know there's only 3 small modular reactors in the entire world, and none of them are in the U.S.? Like Oklo and some of these other small nuclear names have years to go. Like CEG literally right now owns 30% of all the US's nuclear reactors. Like all of them, 30% are owned by Constellation Energy, largest pure play. Close second is not close second is Vistra Energy. They own like 3 reactors. Okay. Yeah. Hey, Alan or Lane, give me the ticker symbol for Tim Hortons. I don't know what that is. PayPal. Let's look at PayPal. This stock right here is kind of a buyback play at this point. Here's the thing, like this stock is lower than it was in 2017. You bought the stock in 2017, you're down on your money with no dividend, unfortunately, but they could be paying a dividend, but they're actually choosing right now. They're saying, no, let's not pay a dividend yet. Let's buy back our own shares like crazy, especially because the stock has been so suppressed. Also, if you look at their multiple right here, they trade at 14 times PE. That's really like a commodity multiple where they're not really expected to create or lose you any money. But yeah, because if we go to the revenue, it's kind of a single-digit growing company. Like revenue's up 5% year over year. You add inflation to that, it's not much. But they do make net income every quarter, easily over $1 billion of net income a quarter. And what is PayPal doing with $1 billion in net income a quarter? Well, like I said, since the stock's so cheap, they're literally spending, at the top here, over $1 billion a quarter on stock buybacks. They're spending all their money buying back their own shares. Here's what that does for you. If you look at the net income is up by 12, but the net income per share is up by 19. So you literally own 8% more of the company than you did a year ago. And again, if they spent that money on a dividend, you get an 8% dividend, cash dividend. But instead, they spend it on buying back their own shares. Pretty cool. Maybe they should buy a company and bring some growth back. They own Venmo, Honey. They're cool. But I just don't know if they'll outperform. That's because they don't use water to cool down towers. Still in the estate phase. Oh, wait, let's see. Is waste management stock stable to invest in? Absolutely. This is probably one of the safest stocks out there. I mean, America, we're always throwing away trash. I mean, this is an industry that's never going away. Like we always got to throw away trash, and they deal with that. And yeah, 95% of the revenue just comes from the U.S. So yeah, U.S. pure trash play. And the stock is not trash because they make real money. They're making $600 to $700 million in net income a quarter. Bill Gates likes it. The Bill and Melinda Gates Foundation owns 8% of the entire company, and even if you buy the stock right now, you get a 1.5% dividend. You get a dividend every single Or you get a dividend raise every quarter or every year. All right. Please tell me I should buy RR. I don't think you should buy RR. That is a bad company. Um, or it's just hard to trust. No fundamentals there. INOD. So yeah, this is a stock I love. I do own them, by the way. Here, I'll show you that. We go over back to my Roth IRA right here. This has been my actually like best performing stock in here. We are up, if we go to our total percent change, yeah, we're up 160% in here. I'm trying to buy more growthy type stocks in my Roth IRA. And this one, they're a data labeling company. And 5 of the Magnificent 7 are customers. Google, Meta, NVIDIA, and Amazon and Microsoft are all customers of this stock right here. We look at their digital data solutions, their main business. It's a growth beast. It's up 99% after it grew 92%. And another thing, they're net income positive. They're now making net income every quarter. So that's great news. Revenue super growthy, making net income every quarter, deleveraging the balance sheet. They have some great customers, making free cash flow every quarter, beating on analyst expectations. I mean, look at this. It was a record revenue this quarter. In 2 quarters, they're expecting 71 million. So I really, the future's bright on end of day. They just keep beating expectations. Would I buy them here? Certainly not. Would I buy them over $80? No. But I'm not selling here either. I'm not selling a single share. I only own 9 shares, and that's why. Maybe if it was my largest position, maybe I'd trim some, but it's such a small position. That's a secret. I just want to let that position grow. So anyway, someone said Grab. Yo, dude, Grab. This is like the international Uber place. So if you're wondering what this company does, they literally do exactly what Uber does, but check this out. In all these other countries, notice the US, Canada, UK isn't on here. Malaysia, Indonesia, Singapore. So that's why it was so genius if you go to the shareholders for Uber to buy this company. Uber just bought legit 13% of the entire company. They're now the largest shareholder. It was genius, I think, because that gave Uber instant international diversification. This is a great financially sound company, no net debt, making net income every quarter, growing revenue every quarter. With look at that expectation; it's supposed to be $1 billion in 2 quarters. They're backed by Toyota Motor as well on some shares, so kind of backed by Uber and Toyota. I really like Grab. So yeah, they literally do exactly what Uber does with a little bit of fintech services, which is growing insanely fast. Internationally. Can you buy Baba? Well, you can. They're an ADR though, so that means like a bank in the US bought a bunch of shares and then gives you those shares. So you have to pay an ADR fee because they're Chinese. But this stock has been doing great because they announced they're making a chip. Oh, wow. They bought back 17 million shares in September, it says at the top here. So they're doing some share buybacks. But they're also getting into chip production where they're going to start making GPUs to fill the void because NVIDIA can't send their chips to China anymore. So Alibaba said they're going to start getting into that. But look at the net income they make. This is great news. They're making, this is in USD, they're making good net income every single quarter. What's the multiple as well? They're trading at 22 times net income, 0.5% dividend. So yeah, they own AliExpress. It's kind of like a Temu kind of, but it's more business to business than business to consumer, more than like an Amazon or something. So yeah, Amazon's interesting. E-commerce play, maybe not a chip play. You look at DocuSign, they're hitting major resistance right now. Yo, I might sell out of DocuSign one day. I mean, here's the thing. They really don't have a mode. They're kind of like Zoom. I bought this stock literally, I haven't touched this stock since October 2023. But they OpenAI and ChatGPT just announced DocuGPT, like a direct competitor to DocuSign and Adobe Sign. Like there's already like any company can just make a competitor to DocuSign. Like they have no IP or patents really, so it's tough for DocuSign. But I do own them. I'm still up 63%. I bought them a long time ago. Can you explain ADR fees a little more? Yeah, basically just every year you pay like a cent or something per share every year. Look it up. It should be just look up what the average ADR fee is for a Chinese stock. It isn't much, but I just avoid them just for tax simplification. And someone said Plug Power. Yeah, dude, Plug Power, not a good stock in my opinion, but it has seen some crazy, it's just seen a lot of crazy momentum. It's just hard to trust this company, in my opinion. And I'll just show you the numbers for yourself. You can draw your own conclusion. If you look in the top right, they're a $4 billion company. That's after today's 33% rally. And there was no news. It was literally just an analyst raising its price target. That for it to rally 33% on that is tough. It's mainly just momentum here. But here's why I can't buy this company. They burn through a lot of money every quarter. 200 mil a quarter. 1.3 billion that one quarter, and they've just been burning money. For eternity. Losing a couple hundred mil a quarter. So you got to watch out for them just because they burn through net income. They do have some sales though, like the revenue's up 21%. Oh, but that's comparing after they fell 44%. Yikes. So still down. I that's a momentum play at this point. It's hard to trust them with those huge net income losses, I think. Hey, no way, Shrek, dude. Shrek with the roses. I really do appreciate that. Massive RR day. So yeah, Rich Tech Robotics. Yeah. It's a massive day for any momentum small cap, basically. So yeah, up 17% on the day. Again, it's tough because this is a startup. They do $1 million in revenue a quarter. The revenue's down 20% year over year. Like this should be nowhere near a $1.15 billion company. But the momentum's crazy. They're doing $1 million in revenue, down 20%. They lose $5 million a quarter, but the momentum's crazy. Ooh, what's this one? Yeah, hey, no problem, Junior. Thoughts on Robinhood? Yeah, Pelon. I'm sure you're talking about the Robinhood stock. I do have a Robinhood portfolio right here. I have my Roth IRA and my dividend portfolio. Yeah, looks like the market's trending down a little bit. Yikes. Wait, let me check the S&P. If we go red, that would not be good. Yeah, the QQQ just went down. I wonder what just happened. Tesla's fallen. Nvidia went negative. SoFi's down. Dang, Palantir's down 6. Well, hopefully we can close green and have a happy Friday. But yeah, let me look at Robinhood stock though. I do own Robinhood stock as well. They're actually my best performing stock of all time. It's my first ever stock to 10x. I've never been up 10x on anything ever before except Robinhood stock. And hey, Narga, dude, thanks for all the roses there. I do appreciate that. If you got a stock you want me to look at, let me know there. I got you. This is crazy. I'm up 46%. I'm so nervous. Hey, what up, Hill? That's awesome, man. What stock are you up on? That's crazy. So here's Robinhood. They're at an all-time high. Robinhood's not at all-time high off momentum. Well, a bit of momentum, but they're at an all-time high because they have great growing fundamentals. We can see their net cumulative funded accounts. That's what you really want to look at. Went from 26.5. It's now 26.5 million. Up from 24.2 million. Their cumulative funded accounts, that's great numbers to improve it that much. And they're not just, improving that, they're making real money. The revenue's up 45% after growing 40, after going 52. They are on a growth streak, and companies with high growth deserve high valuations, high PEs. And look at this. They did 989 million in revenue. Out of this 989 million in revenue, 390 million of it was after tax net income. They're doing a couple hundred million in net income a quarter. It's insane the profits they're making. This brokerage is making insane money. The Robinhood Gold subscription is doing great, but okay. Yeah, hey, let's look at GRRR right here. I know this is not a stock you want to have a lot of money in. You can't trust a lot of money in this stock, maybe a small little bit of the portfolio, but not real money. Dang, they're not up on the day. A lot of momentum stocks are up, but not this one. Here's the thing. All right. The revenue, that's good. At least the revenue's up 76% year over year. 2023, it was higher, but the profits are getting better. That's good. What are the expectations? So yeah, they did 21 mil of revenue. Analysts are expecting 33 million. One thing I do like about this stock, and I don't think I'm going to be able to find it. Oh, it's right here. Look at that. So here's the one thing I like about this stock. And this is the good news that I think you want to pay attention to for the future. Gorilla signs, this stock right here, signs a $1.4 billion contract with Freyr Singapore to build a Southeast Asia data center. So hopefully that should add a lot to their future revenue, that new data center. So this might be a data center play. I don't even know what they do. So I do apologize. That probably wasn't too helpful there, but that news right there is good. And hopefully it's going to help out them in the future, but I wouldn't trust a lot of money in that one. What do you think about REITs? So REITs, I like them for the dividend, but they don't outperform in the long run. If we look at the VNQ with the REIT ETF, which just owns a bunch of REITs, it's lower than it was in 2019. S&P 500 is up like 2 to 3x since 2019. This one's flat. But there is one REIT I do own, and it's a growthy REIT. I was very particular with which REIT I picked because a lot of them don't do well. but I actually picked IRM Iron Mountain. This is a data center REIT with real growth, real stock price appreciation. And I'm not up crazy. I'm only up 7.4% on this company. But here's what's so cool. You get a 3.3, well, the yield's lower now that it's up a bunch, but when I got a 3.3% dividend. They have a rule where they won't let their dividend payout ratio get out of the mid 60s. So they have a 65% payout ratio always for a 3% yield. They have so much future revenue coming from the data centers development pipeline. It's crazy. So Iron Mountain is the one REIT I picked. I think you want to pick and choose your REITs. Howdy, mate. Is this a safe app or a site? Yeah, hey. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. This is a brokerage right here. So first off, you're FDIC insured for up to $500K, even if there's... Also, this app, by the way, this is where you buy stocks, and if you want to get this app, it's in the link tree in my bio. This app that I'm on right here is also publicly traded. Here, I'll be super quick. I do own them too. So FUTU stock is... this app I'm on right now, publicly traded. This is their stock right here. And if we go to their net income right here, even if this company went bankrupt, you're still FDIC insured and you don't lose any money. But it's good to see that this company is booming. They did 330 mil in net income this quarter. The growth is actually insane. So yeah, they make brokerage commissions, interest income. That's what's so cool, actually. You see this interest, how is that growing? It's up 43% year over year, their interest income. I keep my cash in this app right here. If you look in the middle of my screen, I got 1,100 of cash because it earns you daily interest. And so I get a 3.85% APY. They also earn a little bit of interest on top of that, make money. Anyway, let's keep going here. Dude, Looney Zone. Shout out to the member Looney. He just donated $2. Dude, Looney, with the $2 super chat on YouTube. Thank you so much, my friend. You don't even need to donate. I already appreciate you so much. But yeah, this is a bit of a boring name, to be honest with you. And hey, I feel like a bad person. He just donated $2 for me to kind of not say great things about his stock. But as you know, I just love being fully honest. I'll just show you the numbers for yourself. They own some great brands and they have a great management team. One thing though, one reason the stock tanked right here, if you're wondering what the heck happened right here, they sold these earplugs to the US military that gave a bunch of people cancer. So it's so sad. There's so much pending lawsuits from families and like not conspiracy, actually happened. The earplugs did cause that. So it was so sad. And that's really what's been a huge, they lost 7 billion, 2 billion of net income, but it's more consistent now. Good news. They're making good money right now. It's not growthy too much, but they're making, if you average it out here, they're making close to $1 billion in net income a quarter. But look at this revenue. This is the boring part. It's going to be a slow grow for a while. I mean, revenue's up 1.4. That doesn't really beat inflation. Revenue's up 1.4. Last quarter, it was down by 1. Previous quarter, only up by 0.13. So that doesn't really beat inflation. It's tough, but you do get a good yield here, a 1.8% dividend yield. It is safe after the cut, especially with these good numbers. You know what? Let's just go see that. So they're making on average $1 billion of after-tax net income a quarter, we'll say. The dividend cost $390 million. And they're also doing share buybacks right now. I don't know if that will outperform in the long run. You really want to see the growth come back. You want to see the growth come back. Hill said, my best performing are NVIDIA, Google, Marvel. Dude, those are all great picks. Yeah, Rocket Lab, Kratos. Kratos is going nuts today. So... what's going on with Palantir? Yeah, Palantir was, dude. Actually, there's specific news about Palantir today. The government came in, or the military said some bad stuff about Palantir, about their, I wonder if I can find that article again. Oh, maybe I'm not going to be able to find it because there's so much news that comes out about, maybe it's this article right here. Palantir under fire over Army's high risk. Oh, no. The government said Palantir has some holes in their government software. Because as you know, legit 55% of the revenue comes from the government. The government revenue is up 50% after going 23, after going 15. The government revenue is at a new record, all-time high. The growth rate's growing. Also, the Palantir revenue is also booming. They're with other S&P 500 companies and commercial, mom and pop shops, it's up 46%, also to a new record. So pretty cool. They're just a pure growth company, but the valuation's pretty nutty. They traded 120 times revenue, not 120 times net income, but 120 times sales. Pretty expensive. I like to own this one, but not at this valuation. What happens is, hey, Joe, by the way, this is a brokerage where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. And Trust said, look at HSY. This is Hershey's right here. They actually own some pretty cool stuff right here. Do you have a YouTube or That helps people grow their account. Yo, Rebuild. First off, by the way, guys, I sell nothing. I have no course book, but I do have a YouTube channel. Yeah, I make YouTube videos all the time on there. I do stock portfolio updates, how I analyze stocks, and I'm streaming on YouTube right now. So if you ever missed anything and want to replay the stream or missed it, I'm streaming on YouTube and you can replay it on there. It stays up forever. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But if you just type into YouTube Nathan Robert, you'll find it. But here's Hershey's right here. They own a lot of cool brands. Actually, they don't own Kit Kat. Actually, Nestle does. They own the brand Kit Kat just in the US, but they fully own Reese's. They own Jolly Rancher, Skinny Pop popcorn, and a lot of people, you get a nice yield here. You get a near 3% dividend yield. But one thing that's really hurting their net income and their margins right now is commodity inflation. If we go to their gross margin is down 25% year over year, and net margin is at 2%. That's because the commodity price of chocolate is literally 10x. Like the commodity price of chocolate, like there's a drought. You can only grow it in some areas. Like the chocolate commodity has been really high. So it's hurt their input cost. But Hershey has been good enough though, because the rules for how much chocolate before it's not considered chocolate anymore for the US is really low. So in other countries, it's really hurting, like Nestle more. But yeah. Dante, what up, dude? He said Astera Labs. Yo, I think that's a company. Wait, they're not owned by NVIDIA, are they? No, that's APLD. So Astera Labs, that's another stock that deserves to be at an all-time high, to be honest with you. ALAB. It was just the military ones. Please keep buying 3M. Yeah, dude, 3M like created Velcro and certain other stuff. I've learned about them like marketing. Yo, DC Protocol. Yo, dude, DC Protocol. Thanks so much for the rose there. If you got a stock you're going to look at, let me know. So here's Astera Labs right here. They're at an all-time high, and they absolutely deserve it, in my opinion. The fundamentals are great. If we just go to the revenue right here, this is what justifies the high premium. The revenue is up from 76 million to 191 million. It just hits a new record every year, every quarter. So, and not just revenue, but real money after tax net income. They did 50 mil in net income this quarter, 30 mil, 25 mil. And look at this fortress balance sheet. They literally have no debt at all, over $1 billion of cash on hand now, no debt on the books. That's a huge safety net, takes a lot of risk off the table. So yeah, great company. I put them on the watch. It's like a great growth stock. Great growth stock. OMG, Meta crashed. Wait, what does that mean? Let's go check out Meta. Is that down 1.5? Yeah, I think the whole market's crashing right now a little bit. Meta, hey, that's a great never sell stock. I'll happily take a lower price on them because I do eventually want to buy one more share because my actually Meta position is smaller than it's actually my smallest holding in here. If we go by total equity in here, Meta is 3,500. Ooh, that can't be good. So I'm actually going to hide my screen really quickly and fix this. Give me one. I'm actually glad Robinhood do that. I hope I don't want to reveal any sensitive information. Thank you, Robinhood. But I don't know what I clicked to reveal that. Okay, we're good here. Okay. Yeah, here's my. Hey, by the way, I like being fully transparent. I share my portfolios. Hopefully, I don't share anything I'm not supposed to. But yeah, if you ever got any questions for me, I go on a lot of other YouTube streams and TikTok streams. No one really shares their portfolio. They don't show how much they're up and down on every stock. They don't show their losers. They don't share their history and their total percent change. And I try to do that on here. I have multiple different portfolios. I have a different goal with each portfolio. Like here, all time, very top left, open P&L. We're only up 14% in the all time in this portfolio. We do have some losers in here. Sprouts Farmers Market's been a bit of a loser. This account, though, this account has made up for every mistake I've ever made a mistake on. We're up 60% year to date, and all time since inception on a return money weighted, we're up 137%, which is kind of cool. Anyway, what should I buy right now? I don't know, man. Not financial advice. Yeah, hey, yeah, that is a cool feature. Yeah, careful. Thanks, John. Yeah. Okay. Let's keep going on some more stocks here. Some big rents at 3M makes great products. You're right. They do have very quality products, like industrial type products. So BEP, I think that's Brookfield Management. Yeah. Oh, Brookfield Renewables. Okay, wait. So this is like just one of their businesses. Unfortunately, this stock hasn't done too good. It's the same price that it was back in 2019. They might have a good dividend though. Oh, wow. So a 5.5% dividend, it might be unsustainable. I guess we can go figure out. Oh, so they're in hydroelectric. How's the hydroelectric business doing? It's up 20% year over year. Sustainable solution, they're in wind. How's the wind doing? Down 5% year over year. So let's just go to net income right here. So this just looks a little choppy, like they made 100 mil, but then they lost 100 mil, but then they made 100 mil. So they are kind of one-time adjustments. If we go to their operating profit right here, they're actually making money every quarter, but there's some reason that they're having these gap adjustments. I wonder why. The revenue is growing nicely. It's up 15 after going 22. But that does put a strain on their dividend when they're really like, they made 100 mil of net income this quarter. Let's go see how much the dividend cost. The dividend cost exactly, 280 million in net income a quarter. So it cost 280 million in net income a quarter. Just looking off their net income, they didn't make that a single quarter for the past year. So just be careful. That one might have a bit of an unsustainable dividend. Paid said, good job. I'm making a comeback. I just locked in my biggest gain ever today with ACHR. Yo, nice, dude. That's awesome. You sold ForceWipe? Are we talking about Rust now? What about Lululemon? Yeah, Lululemon's, it's been a tough performer. So their North America sales, their main market, North America, the revenue only grew 1% year over year. Also on their earnings, they lowered their guidance. So that wasn't great. Yeah, if we go to their comp sales, it's only up 1% year over year. Not great. Here's the number of stores. Lululemon has 784 stores, up from 720. 67% is the women's apparel products. But they lost their margins, which is unfortunate. Their international business grew by 25. That's the real growth story, international, because the U.S. only grew by 1. So when we blend those together, the total revenue grew by 6. So total revenue is up by 6, but it's in those lower margin countries. So where revenue's up by 6, but their net income actually fell by 5.6. So yeah, that means their net margin fell. Their net margin fell by 11% year over year. So I'd be careful. But at least they're still making a bunch of net income every quarter, and they're doing a lot of share buybacks. Unfortunately, all the share buybacks that they've done before today, like the 400 mil, the 300 mil they're spending every quarter, have been poorly timed. They could have bought legit like 30% more shares if they only waited, but it's whatever. I'd be careful with that one. They might go lower. The law of large, it's in an industry like the apparel business. So they trade it, like all the apparel stocks in the long run, just like don't do good. Under Armour, Nike, it's just tough. Okay. Gap, I think Gap is, they're obviously, Lululemon's more of a premium brand. Look at Gap right here. Gap is the same price that it was back in 1998. Under Armour is lower than it was in 1998. Adidas is lower than it was in 2015. A lot of these brands, hey, because of you, I got Comfort Systems and it's paid off very well. Yo, no way, Edward. Dude, that's my number one stock of all time, Comfort Systems. So they're my largest holding. They've just been on an absolute tear. I'm not trimming either. I'm just holding on to my position. So glad. Not many people. I own a lot of like stocks no one's probably heard about. Like no one's probably heard of Powell Industries or Coca-Cola Consolidated. This isn't the main Coca-Cola company that everyone knows. They have a super low dividend. Amphenol Group, Perion. Perion's pretty trash right now. So. Aren't the Green Bay Packers a publicly traded company? Are they? I don't know. I haven't heard that. If anyone can find the ticker symbol for me, maybe we'll check them out. Ooh, someone said Mondelez. So this is another food company. And again, a lot of the food stocks have really been getting hurt. Hershey, even the restaurants like Wendy's, Chipotle. But this one owns a lot of premium brands that I love. I love their brands. Like they own Oreo. They own Toblerone chocolate, if anyone's heard of Toblerone. So they own Sour Patch Kids. Like they own a lot of brands that everyone likes. And if we go to there, biscuits and baked snacks are 51% of the revenue. Then 29% of it is chocolate, gum, and candy. I wonder what gum brands they own. Cheese and grocery products. So do be aware, this isn't a U.S. company. They're a European company. So most of the revenue does come from Europe, 36%. Then 25% is to the U.S. Let's see net income. They make good money. I honestly, I like Mondelez better than Hershey's. They're making, if you average it out, like 800, couple hundred mil, basically 800 mil in net income a quarter. And you get a nice 3% dividend yield with that one. Pretty cool. Pretty cool. Thoughts on the ARKQ? Wait, ARKQ. So this is the Autonomous Technology and Robotics ETF. So she has her main ETF that Hey, watch out for that annoying person in chat. There we go. Get the, by the way, watch out for people impersonating me. I don't sell anything. I have no course book. I'll never follow you or DM you. So here's ARKQ. This is an ETF, which is just a basket of stocks. And here's what it owns. Its largest holding is Tesla, then Kratos, Teradyne. Yeah, this is a interesting robotics play, Teradyne. I'm looking more into them. Palantir, AeroVironment, Archer Aviation, Rocket Lab, AMD, Trimble, and Amazon. So anyway, that's one of the better ETFs. Definitely better than her main ETF. If we go to Kathy Wood's portfolio, she lost a lot of respect for how bad her ARKK ETF has done, but she has some good picks like Robinhood, Roblox. Roblox. Shopify has done insanely good. You know what? I might look at Shopify. No one asked for Shopify, but I got to share with you guys. Oh, wow. They're back to another 52-week high, just like I thought. So this stock deserves to be at an all-time high. I've had a Shopify store before. They print like money. And look at the annual revenue growth. This is what justifies the crazy high PE on Shopify. It's because they're crazy high growth. The revenue literally just hits a new record every year, every quarter. So Shopify is a growth monster, in my opinion, and not just making revenue, but making real profits. The FCF, which is free cash flow, is a couple hundred mil a quarter. The net income is a couple hundred mil a quarter. Shopify is a never sell growth company, in my opinion. They're great. Belize PL. Hey, what is that? Dude, if you got a stock you want me to look at, let me know with the ticker symbol. I don't know what some of these, like Naburu. Hey, give me the ticker symbol. And Beasley, I don't know what that is. So, hey, Shell pays good dividends. Yeah, Shell, they're actually one of the worst performing, I think, oil stocks out there, unfortunately. Let me see if you can find them. So, Shell, here it is. So yeah, this one, unfortunately, the Shell is the same stock price that it was back in 2006. So that's kind of the thing. These oil and gas stocks don't outperform in the long run. But what you do get with these oil and gas stocks is nice dividends. You get a 4% dividend here. But to be honest with you, look, this has a 3.8% dividend. To be honest with you, I'd rather go with Chevron right now. Chevron has a higher yield. It has a 4.3% yield, so a nearly 1% higher dividend. And look at the stock price Look at the stock price appreciation on this one. This one is way, way, way higher than it was in 2008. So I'd rather go with the Chevron or an ExxonMobil over Shell. Okay, hey, S. Lopez, what up, dude? I saw Plug had a pop. Yeah, we just looked at Plug. It's just an analyst price target raise. I don't know what's. That one looks like junk, to be honest with you. No real fundamentals there, but it's crazy momentum. So BEZ would be interesting. All right, let's see here. BEZ. Let's see if we can find it for you. So BMNR. Hey, that's just. Hey, which one is it right here? I looked up BEZ. Is it this Australian company or the Singaporean company? I can't find that one, unfortunately. Or maybe it's one of those two. BMNR. So I don't have much to say. What this company literally does is just they buy Ethereum. So it's an Ethereum holding company. Tom Lee works for the company, which is pretty interesting. But yeah, revenue from self-mining. Pretty much, it just does what Ethereum does. The Ethereum version of MicroStrategy, I call it. So yeah. I'm 17 years old and I have 70K portfolio value. Is that good, dude? That's more than good. That's like better than me. That's like insanely better off than I was at 17. Like, wow. That's like my wow. That's insane. What's your average cost for Meta? Yeah, hey, if you ever got any questions for me like that, like what's your average cost on a stock, let me know. Or what's your total lifetime performance in a portfolio, let me know. I like being fully transparent, but my average cost on Meta is $526. I've been in Meta for a long. Oh, there's our dividends we get. If we search by dividends right here, get this out. These are all the dividends we've got. $1.50, very small dividends, but yeah, we were buying shares, at $4.40. We bought 2 shares at $4.40, one at $4.50, but then I did what most people don't like to do. I was buying it at $4.40, but then I continued to buy higher at $6.59, at $6.44. I didn't care that I was dollar cost averaging up, so my original cost basis is much lower. It's like $4.40, but I bought up so much that it's now $5.30, which is okay to do sometimes. If it's a great quality, don't focus on that. You always want to focus on your quantity of shares. The person with the quantity of shares always beats the let's watch this right here. I own 5 shares of Robinhood. These 5 shares are worth 700. I'm about 10x on Robinhood. The person who owns 6 shares of Robinhood and is down on their position is doing better than me. Just because, the quantity of shares, you always want to focus on that instead of like dollar cost averaging up. Okay. But let me type it in for you. BEAZLEY. So, okay, this is the ticker symbol. We found it. Look at the volume. Okay, we might not even cover this stock right here. Oh, we don't even get any data on it. So, yeah, we can't even give you any thoughts. I'd just stay away from that one. Hey, thanks, Hill. I appreciate that. Yeah, by the way, if you want to hit the follow button, we stream every single day. Sometimes twice a day. We just look at stocks. I sell nothing, no course or book. What apps do you use for buying? I see Robinhood, but what else do you use? Yeah, hey, I have all these brokerages right here. I have Robinhood, I have Webull, but out of all 3 of these apps right here, this brokerage is my favorite one. It's the most useful. That's why I'm doing all the stock analysis on this app right here, because it has the best tools for free. So anyway, this is my favorite brokerage. If you want to get it, it's in the link tree in my bio, the very first link there. Hello from Indonesia. Hey, what's up, dude? Hey, try not to spam there, but yeah, what's up, man? What stock have you owned the longest? Ooh, it might be like actually no, it'd be Robinhood. Probably Robinhood or like UiPath or Zoom. I've owned Robinhood. You ready for this? I've sold most of my position, which is so sad. But since the Robinhood IPO, here's where they IPO'd at, and here's where I bought my shares right here. Yeah, there's my buy order. So basically, this stock right here. I bought it in 2021. Yeah, I bought that in 2021, and cool. Probably that stock. That's the thing. You diamond hand. When you diamond hand, like let's say you're up 3 to 4x on your position, don't fully sell out. That's the biggest mistake I ever made. Like look at Robinhood. I have 5 shares today. I kicked myself in the nuts. I sold 50 shares at $36. When I was up 200%, I was up 3x on my shares. I was like, oh, I've been down on this one for so long. Let me just go ahead and sell most of my position. My biggest regret. So sometimes you want to just hold on to your winners. Don't, trim your flowers and plant weeds, as the saying goes, or something like that. So yeah, that's a long time to own something. Yeah, man. And this portfolio specifically is called my buy and never sell portfolio. So basically every stock I own in here, once I buy it, I'm going to try and never sell it, like legit never sell. So this is called my diamond hand portfolio. Basically I dedicated this whole portfolio to diamond handing. I do some swing trading in here. Like we just bought we bought 1 share of Axon. And then in this portfolio, I have like goals with each portfolio. It's kind of fun. There's no burden for having multiple brokerages literally at all. Just an extra sheet of paper. Like this is my dividend only portfolio where I only own dividends in here. So yeah. All right, let's keep going back to stocks here. So Nate said QURE. I've never heard of that stock. So it's a NV stock. Does that mean Netherlands? I think this is a Netherlands company. Let's see. There was some crazy momentum. Like, I don't know. What's the market cap? A 3 billion market cap. Let me go see what happened in here. Discovery and development of innovative gene therapies. So it's a gene therapy company or something. Maybe it's like a CRISPR Therapeutics. I'd be really careful. I mean, they're losing, 30 to 40 million in net income a quarter. That's a bit tough. I thought 30 to 40 million a quarter. I don't know. There was some sort of good news right here that I don't know. Maybe there was some sort of super successful results from one of their FDA tests or something. I'm not sure, but there was some sort of good news. Hey, Josh, no way, man. What's up, brother? Good to see you. Hope you're having a good day. All right. So the S&P is scary today. Why is it diving? Let's see. What is the S&P doing? Well, yeah, it's break even today. So yeah, it's been falling. It's no big deal. I'm not too concerned with the market falling a little bit. We need a little bit. We've been up all week. So, okay. So we can't cover DKNG, unfortunately. Someone said Mo. Hey, you know what? This is one of the higher yielding stocks that actually have a sustainable high yield. So if you're looking for a higher yielding play, honestly, I'd recommend this one. Not financial advice, of course. But again, even though the yield's sustainable, it won't outperform in the long run. Like this stock is lower than it was in 2016. So you bought the stock in 2016. You are down on your position, but you get a nice yield. Look at this. You get a 6.2% dividend. And look at the payout ratio. 62% payout ratio. Very fair. And they had a little one-time adjustment to their net income this quarter, but they're pretty much making 2.5 to 3 billion in net income a quarter. And here's how we can tell that the dividend's safe. The dividend cost exactly 1.7 billion in net income a quarter, and they can easily cover that. So there's the exact number for you. It costs 1.7 billion a quarter. They're making, well above that every quarter. So they're in an industry that I can't talk about. I would tell you more about that company. The industry will always have a low multiple just because of the industry. I don't think he's actually live. Hey, this is live. You can see the time in the top left. And, if I click on any stock right here, Amphenol, you can see the stock price of it in the top left. You can kind of reverse engineer that. See if I'm live. So yeah, FRMI stock. Hey, they just IPO'd. I can't give you any thoughts on this company right here. They literally just IPO'd like yesterday. Because since they just IPO'd, we don't get any data from them. There's no financial data. So I wish I could give you thoughts on them, but I just can't. No, I don't like the IPOs are really scary. They usually rally up when they first IPO, then slowly go down. So Saucy Joe said TKO stock. Dude, yeah, TKO. This is a niche company, This is the stock that owns UFC, and that other thing, the UFC and the WWE. Yeah, so look at this. 42% of the revenue is the WWE. They license this out. Then they have the UFC, which they license out. And so they actually make good money. I mean, if we go to the after-tax net income, this is insane. I mean, they're making, especially this growth, they're making now a couple $100 million net income a quarter. I think you get a dividend too. Yeah, 0.4% dividend yield. So I like it. I like this one. They have the licensing rights, and yeah, they got good margins. Yeah, hey, that's awesome, Joel. That's awesome, dude. You're doing great. Yo, what up, VDRR? I'm laid up with hernia surgery. Wait, I'm laid up with hernia surgery and bored out of my mind. Oh, dude, that sucks. I hope that goes well, my friend. Hey, at least we can use that time to learn about some stocks and stuff. And again, I'm not an expert. None of this is financial advice. I'm just a college student. Definitely, I don't sell anything. I have no course book. I just like streaming. And the best way to support me, though, if you do want to support me, best way, I'm just trying to build up my YouTube channel. So if you want to support me, best way, just subscribe to my YouTube channel. It's called Nathan Robert. It's in the link tree in my bio. Just type in YouTube Nathan Robert. I'm streaming on TikTok and YouTube, and I'm trying to build up my YouTube stream because I don't get much viewers on there. We got 185 people on the TikTok stream and 17 on the YouTube. So I'm trying to build up that. Anyway, here's EME, MCore Group. This is an HVAC play, kind of like a really big competitor to Comfort Systems. They just got added into the S&P 500, literally the same day Robinhood did. The same day Robinhood and AppLovin got added into the S&P, this company got added into it as well. So basically HVAC play, heating, ventilation, air conditioning. They make good money. They're expanding margins, 200 to 300 mil a quarter. Nice dividend growth. Yield super tiny, but it makes up for it with the growth and the stock price appreciation. When stock goes up, yield goes down. So MCore is literally just a slight. They're like the same thing as a Comfort Systems FIX. They literally do the exact same thing, and the stocks nearly look identical when you compare the two. Actually, let me see if I can do that. So here's Comfort Systems right here. If I go to, we can do the trend projection right here. There's this feature where you can see other chart similarities and see what it's going to do next, but I don't care about that for now. Versus overlay, let's see. Let me add EME over here. So MCore, let's see, compare. Yeah, so these stocks, these HVAC stocks move very similarly. Looks like Comfort Systems has outperformed, though, is what it looks like. Yeah, Comfort Systems has had a crazy rally these past couple months here. But yeah, it's pretty much like a smaller version of FIX, or bigger version of FIX, slightly bigger. How long have you been doing this? I'm on day 2. Hey, what up, Eli? I've been investing for a couple of years now, for basically since 2021. So, your future self will thank you for investing. Again, the goal with investing isn't to get rich quick. It's to build and preserve wealth, slowly build and preserve it. You're supposed to get 8% a year with the S&P. So you turn $100 into $108, and then you compound it. So then 108 goes to 120, compound again, 120 goes to 150. You get that snowball effect. So it's not get rich quick. That's what I see people recommending some super crazy stocks like QUBT is so no fundamentals. They're these are the ones you got to stay away from. They've been doing great because the market's momentum is doing great. But I'll show you this, for example. Here's QUBT. I on this channel, we basically look at stocks with good fundamentals, or we try and see if a company does have good fundamentals. Here's what you're buying with QUBT. Like, does anyone even look at the like financials here? Again, it's all momentum right now, but this is a $4.5 billion company. I know many, very many $4.5 billion market caps, and I know what their financials should look like. Like this company makes every other stock out there look like a steal of a deal. This company's a revenue-less startup. They did 60,000 of revenue in the past 3 months. 60,000 of revenue, and they lose 10 million net income a quarter. So it's just tough, like, to trust these names. They lose money every quarter and have no sales. I don't think it's worth 5 billion. That makes Powell Industries look cheap. This company is worth 3.6. This is a $3.6 billion company, significantly less. Look at this company. Like, here's a company where they're doing 40 to 50 million in net income every quarter with no debt and a dividend. So it's just crazy momentum right now. I'd be super careful. Hey, Elaine said I'm up 125% this year. That's insane. That's insane. WWE and UFC. Yeah, those are cool assets to own. So should I sell? I wouldn't have it as a huge position. That's all I'm going to say. I wouldn't just trust. It's hard to trust money in that name, in my opinion. Like the kind of stocks you want to trade like that, like, in my opinion, if you're looking for a momentum stock to trade, look for a momentum stock to trade that has good fundamentals, like SoFi, like Reddit, like Robinhood, like Dave. Not so much like Supermicro. But like PSIX, dude, P6. These are insane. So those are the kind of companies that I look for. The super momentum-y ones that actually have good fundamentals. And those are the ones that I swing trade in this portfolio. It hasn't always worked out. We have lost some money on some stocks in here. Yeah. Like Robinhood as well, SoFi, these are insane. So anyway, here's Micron. This is a company that I think is going to continue to go higher. They have great growing fundamentals, and they're still cheap. If you go to the PE right here, they trade at 24 times net income. We look at the industry average, you compare that to NVIDIA, AMD, Broadcom. That's a pretty fair multiple, and that's real. They're really trading at 24 times net income, and they're just as growthy as the other names. Check this out. The revenue's up 46% after growing 93%, so they're continuing that growth. And out of this revenue, the $11 billion of revenue, $3.2 billion of it was net income. The net income grew 260% year over year. Like the margin expansion here is insane, fortifying their balance sheet, and you get a dividend too. But I think there's even more upside because the multiple's still pretty cheap, and they're growthy. Pretty cool. Should get the dividend growth too. Oh, live inactivity detected. You're okay. Sorry. All right. We just filled out a CAPTCHA because TikTok thought I was AFK. Okay, here we go. SoFi just buy and forget. Yeah, dude. SoFi's a beast. And hey, Raw Man, what's up, dude? Hope you're having a good day. So someone said DRTS. All right, let's check this one out. DRTS. Let's do it for you. This is Alpha Tau Medical. So let's see. This is a $360 million company. So that's a very small market cap, $360 million. They're a startup. So if we go to the revenue right here, it says zero because they've never sold anything. They've never sold a product or a service. So yeah, that's why when we click on the revenue, it says no data because they've just never sold anything. And they lose 10 million a quarter. So that's one thing that's pretty significant. They lose 40 million in net income a year. That's over 10% of the entire market cap a year. So we really want to see this company finally start selling a product. Like they're a startup. There's no revenue there. So it's tough to so the multiple, the valuation you're paying is infinite. So with no clear path of revenue, there was no analyst expectation of any revenue anytime soon. It's a tough one to trust with some money. Raman said, what platform? Oh, yeah. Hey, if you want to get this app I'm on, this is where you buy stocks on. It's in the link tree in my bio, the very first link there. Yeah, you can track all the super investors' portfolio like the Pelosi tracker. These super investors have to make all their trades public by SEC law. And you can see their exact weightings, holdings, how they've done versus the S&P 500 and stuff. Pretty cool. Oh, yeah. And you can batch trade, follow like Buffett's portfolio. If you wanted to just copy what Buffett does, you could batch trade and set your portfolio like his or something. Anyway, yeah. Linktree in bio, first link there if you want to get it, my affiliate link. Oh, and actually, I want to pull this up because I want to see if this has changed. We can see the interest rate cut probabilities. There's a lot of cool data we get here. Oh, dude, the investment themes. If you're looking for an industry to get into, Fed rate cut beneficiaries, the metaverse, VR, AI chip play. They have a bunch of different sectors, the safe haven assets, the drone plays. They have so many sectors you can kind of look from. and to like discover new stocks, which is cool. But one cool feature I was wanting to show you guys, oh yeah, the interest rate cut probability. So on October 29th, there is a 96% chance we're getting a 25 basis point cut. So nearly in less than a month, there's a 100% chance of another 25 basis point cut. So that should be really interesting. Maybe look at the interest rate sensitive stocks, and that should be a good tailwind. Yeah, I agree. Araya, MU has really good financials. What are your long-term thoughts on Oklo? I think it's junk. You know, this is all moment. This is like the most bubbly of them all. Like they want to. This company is a startup. They're worth $18 billion. I don't believe it. $18 billion company, no revenue. They want to make these small modular reactors, these SMRs. Like these. There's no even proof of like there's only 3 working small modular reactors in the world, and none of them are in the US. Like they are years away from like any revenue. So if you're looking for exposure to nuclear, Oklo is probably one of the worst stocks out there to get exposure to nuclear. But yeah, some of the other ones as well. SMR is okay because they have like one little contract. But the company, I've looked, there's only 2 you really want to buy, Vistra Energy and Constellation Energy. Out of all the nuclear reactors in the US, Constellation Energy owns 30% of them. This is the largest pure play for nuclear energy. It's about 22 reactors they own. And the second, they're the first place by far. There's no close second. Vistra Energy is kind of second because they own 3 nuclear reactors. But anyway, Constellation Energy, Vistra Energy, maybe a GE Veranova, but they just collect the high PJM auction, ERCOT auction electricity prices the same way VSG and CEG do, but Vistra Energy and CEG are your nuclear plays. But the other ones are just momentum. Oklo, SMR, those are your momentum. Amazon target end of the year. I don't really have I don't set price targets really for stocks. I just know in the long run, like this is I don't know. It may not happen next year, but it's probably a $300 stock eventually. Could be 2-3 years, and I'm fine with that. It's like this is a buy never sell stock. You never sell Amazon. They're literally they're an Oracle, a Walmart, an Instacart, a UPS, like all in one. They're a subscription play, e-commerce play, cloud play. They're AWS, number 1 cloud service provider out there. They own AWS, advertising play, subscription play, grocery store play. They're just, I love them. That's a company you don't want as competition. I literally kid you not. I used to not own Amazon, and Amazon was like competing with all my different stocks, and I'm just like, let me just own Amazon. Okay. How do you feel about Adobe? So Adobe, this one is kind of being hurt by the AI thesis. Will we need Photoshop and After Effects and all these applications in 10 years from now? Because people are making great logos in ChatGPT that never even need. But I think we're always going to need the final touch. Like humans are always going to need the final touch for art and stuff. I think this one's worth nibbling right now. Even if you wanted to make this a full-size position, I don't think a full-size position should be over 5% of your portfolio. I wouldn't make, Adobe a huge position, but I would nibble on them. Maybe as like 1 share, as like a fun little kind of see what happens here. I'm on an Adobe product every day. I'm on Photoshop, After Effects, like daily. But check this out right here. For now, the business is booming, but again, it's that uncertain futures why the multiple's so low. They're making 1.8 billion in net income. They should buy some companies with that, but instead, they're actually doing M&A. They're doing share buybacks. If you go to the net income is up by 5% year over year, but the net income per share is up by 11. That's because the share part of the ratio went down. You literally own 6% more of the company than you did a year ago. So if they instead spent all the money on dividends instead of share buybacks, you would have gotten a 6% dividend. But instead they spent all that money on share buybacks, which is great. They should buy a company, bring back some extra growth. Hey, Charles, what up, dude? Hope you're having a great day. I am doing well. Hope you are too. Let's see. What do you think about Microsoft? Hey, what up, Flip? Yeah, Microsoft, that's a great never sell company as well. Let me look at this stock real quick. KRYS, and then remind me, KRYS. So this is Crystal Biotech. They're actually on my watch list, and I don't remember adding them to the watch list. Wow, the stock has done very nicely. It's done very well. Let's see if we can figure out what happened here. They are a $5 billion company. They're actually worth a good chunk. $5 billion company, revenue's up 36%. They're doing nearly 100 mil of revenue now. And out of that, whoa, the margins. This is margins, right? This is crazy margin right here. I mean, they have 40, 50% margins. That's why I added them to the watch list. This net income's ridiculous. Oh my gosh, and this balance sheet. I'm actually going to re-add them to the top of my watch list. Thanks for reminding me about this stock. Who said that? I got to give you a shout out. Shout out to Super Spiral. Wait. Yeah, Super Spiral. Thanks for that. Yeah, look at the balance sheet too. Another great thing that takes a lot of risk off the table. This company literally has $700 million in cash and no debt. That's like 15% of the market cap is their cash on hand. I love them, dude. I love them. Crazy margin. Hey, Tommy, what up, dude? Hope you're having a great day. He said General Mills. Yeah. So General Mills is one of the stocks really being hurt, like every other food stock is, like Hershey's or a Wendy's or something. So I love their brands though. They own like Cinnamon Toast Crunch, a lot of, let's look at the cereal. Cereal is 16% of all the revenue. Snacks are 24%. Convenient meals. I love how diversified that this is. They're in pet, so pet food, I believe. They're in dough. They own Pillsbury dough, baking ingredients, mixes, super premium ice cream. So they must own some nice brand there. So I love ice cream. I wonder if they own Ben and Jerry's or something. I don't know. But one thing the stock's been struggling with is this is why the stock has been struggling right now is the fact they lost the growth. The revenue is down 7% year over year. So that's not great. Revenue's down 7 and the profits are down by 17. Still making very good money, 600 mil to $1 billion a quarter, but we really want to see the growth come back here. And it might be fully priced in, analysts are already, it's not nothing new. So but I do like them. They have a huge dividend too. I mean, you almost get like a 6% dividend yield. I would maybe have them as a small position there. What up, Tommy? So yeah, we'll look at a few more stocks here. Then I got to go. Should I hold AMD stock? I actually own AMD stock. Ben & Jerry's is owned by Unilever. Oh, hey, thanks for that, Logan. Yeah, Ben & Jerry's, Unilever is publicly traded too. They're a European company. So here's AMD right here, Advanced Micro Devices. I do own this stock, by the way. I might be biased. Yeah, check this out. I got 11 shares of them, up 31% on them. So that's great news. I picked them over Nvidia because of the law of large numbers. Someone said what apps you're using right now. Hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Or maybe you're talking about Robin. Or maybe you're talking about this app. This app is also in the link tree in my bio. It's like the fourth link. But this one is my favorite one. I think you're talking about this app right here. Yeah, if you want to get this app, link tree in bio, first link for that brokerage. Anyway, AMD right here, this stock, I love them. If we can see, here's a cool metric. Their PC GPU market share, they have a 17% GPU market share. Half the revenue comes from their client and gaming business, and the other half is their data center business, which has been really growthy because data centers need GPUs, and AMD makes their own GPUs and can supply them to their own data centers at the cheapest cost and the newest models the quickest. So the growth is finally back. Revenue's up 31. Net income is up to 900 mil, pretty much a new record for the past 2 years. The FCF, which has their free cash flow as well, is insane. 1.7 billion of free cash flow. So no net debt on this company either. This is a really good balance sheet. So, hey, Shrek, what up, dude? Thanks for the rose. I appreciate that. How's Meta like now a day's bud? Well, hey, I do love Meta. We were just looking at them. Yeah, I think that's a buy and never sell stock. If you have the intention like me to just never sell Meta, they're worth probably buying a little bit of even today. Like I wouldn't call you crazy to buy them today. So yeah, they're finally back like pre-earnings rally. It's kind of strange. They had really good earnings. So yeah, we can see their active users. Meta literally has 3.48 billion daily active users. X, has anyone heard of Threads? Threads is like an X competitor. They now have the same amount of daily active users as X does. It's insane. They're making crazy net income. They're expanding margins. Their ad business just booms. So anyone heard of the Meta Ray-Bans? They just created these new Ray-Bans, which are pretty cool. They took a 3% stake in Oakley and Ray-Ban's parent company. They're like over $100 billion company. So they spent a lot of money on that. They signed Meta signs $14.2 billion cloud computing deal with CoreWeave after a $15 billion deal with Google. Yeah, Meta explores Google Cloud partnership for AI advanced advertising. Also, Meta, this is kind of scary, impossible to opt out from, is using I forget exactly. It's like using your conversations to train its AI model. Or I don't know, data concerns there, but I guess that's how they make their money. So let's get back to Microsoft. I forgot to get to that one. Do you think General Mills will go back up First off, you're mainly buying them for the dividend because you get 6% of your money back just in a dividend. But I hope so. They probably might go a little lower just because the growth is gone. It won't probably go up until there's a clear path to the sales not falling anymore. Or I don't know. And we'll look at MasterCard. Remind me to look at MasterCard. But here's Microsoft right here. And how much is one share of Meta? I think it's like $700 or something, but you can buy fractional shares. I do that all the time. I just bought like a $5 fractional share of McDonald's. I don't know why I did that. I went to the McDonald's and got the $5 meal deal. Then I'm like, hey, let me buy $5 of McDonald's stock and match it. So anyway, here's Microsoft, a lot of, pretty much AI toolkit, they own Windows, the Google Cloud, Azure business is huge. They own Xbox, Xbox is huge, the console. They own Minecraft. They literally own Minecraft, biggest game of all time, and all of their cloud, dude. No, their OneDrive cloud, their Office 365 subscription, like OneDrive, Microsoft Word, PowerPoint, all that. And this is over $120 billion of annual revenue for them. Pretty much all of the S&P 500 uses Microsoft. It's hard to avoid not being on a Microsoft product. They also have a huge cloud business. This used to not even exist for them. 40% of the revenue is their intelligent cloud business. They are booming it's at a new record right here. And yeah, they have a better credit rating than the U.S. government. They make, $25 billion in net income a quarter. So yeah. What website can I invest in stocks? Well, you just got to get a brokerage. It's where you buy stocks on. You can get any, here are all the ones I use. I have Robinhood. I have Webull. Here's my Robinhood one. But I use all these apps. All the apps, first off, that I use are in the link tree in my bio. If you want to get any of these, they're all in the link tree in my bio. But the one I'd recommend the most is this one I'm on right here. It's the most useful for actually doing research on companies. Any brokerage you can just buy stocks on, but this one actually has real useful features, in my opinion, like the Pelosi tracker and all that stuff. So anyway, if you want to get this app, it's in the link tree in my bio, first link there. Or in all of them are. Robinhood is too. They're all affiliate links too. So someone said, MasterCard, who actually, speaking of Nancy Pelosi, who owns MasterCard? If you go to the Pelosi portfolio right here, again, these are super investors. They have to make all their trades public by SEC law. And, oh no, she owns Visa. Never mind. She owns Visa. Is it Warren Buffett? I think Warren Buffett might own some MasterCard. Anyway, they have a shared, basically, duopoly. Like, it's pretty much just MasterCard and Visa for the payment processors. Like the small little credit card transaction fees that are slowly bankrupting us is making Visa and MasterCard a lot of money. I mean, this is their after-tax net income. They're doing $3 to $4 billion of after-tax net income a quarter, get a 0.5% yield. They also do insane share buybacks. So if you go to the net income, it's up 13%. But net income per share is up by 16%. So yeah, you get a 0.5% yield, but they've bought back 3% of all the shares. So you really have a 3.5% total shareholder return. So yeah, payment solutions. MasterCard's a never sell stock, in my opinion, if you want exposure to fintech. Another fintech stock that's kind of been getting really popular now, someone said SoFi. Yeah, let's do it. Xbox Game Pass price just went up. Oh, hey. Thanks for that, Assassins. Hey, maybe buy some Microsoft stock. Then we got the insider knowledge. Also, Microsoft just rose the price literally like last month of their Office 365 products, which is like Office, OneDrive. That's their high margin software. That's going to be free money for them. That should be insane. But yeah, here's SoFi Technologies. Here's another fintech right here. They have their own banking charter. They're extremely hard to get. They got it through a loophole that's now patched because of them. If you go to their financial services, though, this is the part that literally makes this stock, their high valuation worth it. They're so growthy. Like if we look at this, revenue's up 105 after going 80, after going 222. The financial services revenue hits a new record every year, every quarter. And their main lending revenue, the lending revenue's up 30%, also to a new record. And look at the orange line. This is what the analysts are expecting. The analysts were expecting, that's the orange line. They're beating on revenue. They're beating on net income every quarter. They're beating on EBITDA every quarter. They literally made $100 million in net income this quarter. So SoFi is just a beast. I do own them. I might be biased on SoFi, but yeah. I've been in SoFi since IPO. It was long in 2021. I think that was even before 2021, I think. Is that when they IPO'd? I'd believe it. Because I've been also a shareholder for a very, very long time. Check this out. Here's SoFi stock. Here's where I bought my shares. I bought my shares. I think it was on this rally right here. There's my buy orders. Yeah, I bought the stock in 2023, January 2023 is when I bought my shares. And also I've sold some shares. This is a stock I regret every share I've ever sold on SoFi. Same with Robinhood, man. I regret every share I've ever sold of those two. You think Oracle is still a good buy? Not really. What app or website are you using? Yeah, hey, Camero, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, I love this app right here, favorite one. It's where you buy stocks on its brokerage. So, yeah. Someone said Klarna, that's a buy now, pay later stock that kind of just IPO'd. So, what to look for, what you mean? Tommy, I will make a YouTube video about that. Yeah, you know what? I will do that. I do have a previous video, but I want to make an updated one. But yeah, here's Klarna, buy now, pay later company. Man, honestly, in a recession, this is going to get smoked. I mean, people just won't pay back these loans. That's with the firm too. So let me see, are they growing? So good news, revenue's up 21%. Net income is still negative, but they'll hopefully transition into like an Affirm type company. This is the biggest buy now, pay later stock out there. You've maybe heard of Affirm. I think they've partnered with Amazon. I don't know, but like if you've seen pay in 4 with buy now with Affirm, but this company just got profitable and they're really growthy. This is like the main buy now, pay later stock. If you look at the revenue's up 33 after growing 50. And the past 3 quarters, they're net income positive. Crazy. If we zoom out, they used to burn through a bunch of net income every quarter, negative 100 mil, negative 200 mil, but now they're actually making good profits. So that's Affirm. Yeah. Hey, Johnny said race or Ghani. What up, dude? So yeah, this is they're like a recession resilient stock because if there's inflation or something, the Ferrari customers don't experience it the same. They're almost like recession resilient. Their customers don't get like the rich get richer. Like Ferrari's customers are immune from a recession almost, which is pretty cool. Like it's not like maybe like a Tesla where anyway, 0.7% dividend yield, which is pretty cool. That's a great yield, but look at how consistent this net income is. I mean, they're literally making 400 to 500 mil in net income a quarter, and it's super growthy. So yeah, you own stock in Robinhood, but do you own stock in Webull? I actually do not own any Webull stock. They're growthy, but they're just not making any money yet. I also own another brokerage. I own FUTU stock, which is better than Webull as well, I think. So yeah, and I own SoFi as well. All right, Denio said NVIDIA stock. Yeah, let's do NVIDIA. Hey, Catherine, what's up? Hope you're having a great day. So here's NVIDIA right here. Obviously, perfect buy now, pay later stock. Wait, what's this right here? NVIDIA CEO reportedly frustrated as slows UAE chip deals over China links. So yeah, NVIDIA basically can't send any more chips to China. That might be what's hurting them, that's what he's frustrated with. And now maybe some other companies, I can get that. Stock's still done great though. I mean, look at this. First off, huge GPU market share. Obviously, we know that. I mean, I literally, I have a NVIDIA GPU in the computer I'm using right now. Zach said what happens is, yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. They also have this automotive revenue that actually Lucid uses for their autonomous cars. So it's actually kind of like it's like an open source license for any company to be a competitor to Tesla. Lucid uses it's good. They have great automotive software. But anyway, that's like Tesla. It's not like Waymo's LiDAR. Like it's really a like Tesla competitor autonomous driving thing. They also have but most of this business is their data center revenue. Gaming revenue is 4.3 billion, but the data center is 41 billion. It's insane. If we go to the margins on this business, if you go to the revenue's up 55. It was 46 billion. Out of this 46 billion, 26 billion of that money was after tax net income. The margins are ridiculous. Here's their net margin, 56%. Insane. Fortress of a balance sheet. They just did share buybacks. NVIDIA took a stake into Intel. NVIDIA took a stake into OpenAI. NVIDIA's doing deals with CoreWeave. NVIDIA literally is so big, they own shares in individual stocks. If you go down here to the NVIDIA portfolio right here, NVIDIA portfolio, they literally own stakes in CoreWeave, APLD, ARM, Nebius, some other junkier stocks like WeRide. That's a junk company. RXRX is junk. But anyway, yeah, they're cool. What apps do you use as well? Yeah, hey, again, if you want to get this app I'm on, link tree in bio, very first link there. So we'll look at one or two more stocks here. Watching SE stock. Ooh, hey, what up? Secular said UDR stock. What's this one? UDR Inc. Then we'll get to SE stock. I think that's C. So here's UDR. Unfortunately, this stock is lower than it was in 2015. So you bought the stock in 2015, you're down on your position. Do be aware of that. Same store communities. It's up 2.5%. Well, look at it. Their main business here is growing single digits. So, dude, that might be what investors aren't too happy with. You get a crazy yield. Wow. Is this a REIT? What is this? A REIT? Oh, it's just a REIT. Okay, that makes more sense. Yeah. So these REITs literally by law have to pay out 90% of their taxable income in the form of a dividend. That's why they have a 5% yield, but that yield's actually sustainable. You don't look at the net income for these, you look at the core FFO because it adds back the depreciation and the amortization, which is very important for real estate companies. But here's the revenue they made, 250 mil this quarter. Let's go see how much the dividend cost. Dividend cost 150 mil. So that's good. And so it is sustainable. And they even could cover that last quarter, which was a bit. So that's an apartment REIT. My favorite, I believe, apartment REIT. My favorite apartment REIT out there with a good credit rating, great dividend payout ratio is MAA, Mid-American Apartment Communities. They're an apartment company focusing on the Sun Belt area. Pretty cool. So SE stock. So this is I believe this is just like an Amazon for other countries. So look at the growth on that stock. It's crazy. They deserve it too. But yeah, if we go to their where the revenue comes from, look at this. This is 70% of the revenue comes from Southeast Asia. So notice none of the revenue is like the US or anything. But yeah, they're an e-commerce play, basically like an Amazon. This is cool. They're active users. They have quarterly active users this quarter of 664 million. Actually slightly down from the previous year by 4 million. That's all right. But look at wow. The margin expansion here is insane. So if we go to the revenue's up 38%. Revenue's up 38, net income's up 400%. 400 mil of we converted it to USD. They're making good couple hundred mil in net income a quarter. So they're just a growth company. Basically, I guess Southeast Asia version of Amazon. Kind of cool. Is SoFi a good buy right now? It's an okay stock to nibble on. It's a great stock to buy in the long run, but I wouldn't, if I wanted to make SoFi part of my portfolio, if I wanted SoFi to be 5% of my portfolio, I definitely wouldn't make it all 5% today. I think it could go a little lower. The risk reward isn't that great yet on SoFi, I think. So DPO, hey, what up, dude? Hey, Daniel, sorry. I try to get to all the stocks here. I try to be really quick. Oh, Dragonfly. Okay, so I think, what's the market cap? $180 million company. Very, very small company, but a lot of momentum. Look at this. They're pretty close to an all-time, or not all-time high, like a multi-month high here. So they're a drone company, but do they have real sales? No. So yeah, if we go to the revenue, 100% of the revenue is drones, but if we go down here, the revenue is 1.5 million. At least it grew, but I mean, like, it's so tiny. Like, to trust this one as a great drone play. I mean, this $1 million. I like Kratos better. They have like a real drone sales, like with NATO countries, they're selling their drones to. This is a Canadian drone company. So at least the analysts are, they missed on expectations. It's supposed to be 2 million in 2 quarters. I would just be so careful with that play, to be honest with you. It's because they got a government contract. Oh, actually, that's pretty interesting. Best covered call play. I don't even know. I wouldn't sell calls on like the ETF selling calls on like Bitcoin and Palantir. The calls get called like 90% of the time. So these all like basically trend to zero over time. It's a slow NAV erosion of your money, but I used to own this one actually. This one sells calls on bonds. It sells calls on the US 20-year treasury. Oh, look, there's when I owned it. So anyway, yeah, I sold all my shares at 27. I guess it's 23 today. So I can't really recommend any covered call ETFs. Like none of them outperform in the long run. It's just tough. And hey, IXRN, dude, thanks for the roses there. All right, last stock here we'll look at is APLD. Dang, we've nearly been streaming for 3 hours. By the way, if you want to hit the follow button, we stream every single day. We just look at stocks and stuff. And that stock right there, APLD, is owned in the NVIDIA portfolio, and it's really benefited from that. What all do you invest on? Yeah, hey, Zach, if you want to get this app I'm on, it's in the link tree in my bio. The very first link there, it's my favorite app to invest. All the apps I'm using are in the link tree in my bio, too. So here's this right here, NVIDIA portfolio, and APLD is their second largest holding. They just got a huge deal with CoreWeave. I wonder if you can find that news down here. So yeah, OpenAI expands. I think they might have got a deal with OpenAI, but anyway, APLD got a huge deal with CoreWeave. NVIDIA owns shares in them, so NVIDIA owns part of this company, which is pretty interesting. They still lose net income every quarter, so do beware of those net income losses. But there's just a lot of positive sentiment. Would I buy them here? Certainly not. I wouldn't really touch it close today. It looks pretty overvalued here, but yeah, they're a data center hosting company owned by NVIDIA that has the future. Seems good with that company. So anyway, I hope you guys have a great rest of your day. By the way, if you would want to hit the follow button, I really appreciate that. You might get followed by someone impersonating me. Just know I'll never follow you. I'll never DM you. I don't sell anything. I have no course book. So yeah, best way to support me though is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. I'm streaming on there right now. I'm trying to build up my my YouTube channel. So yeah, it's called Nathan Robert. Link tree in bio as well. Oh yeah, by the way, if you want to get this Apple mod, if you want to get into stocks, you need a brokerage to buy stocks. And the number one brokerage I like is the one I'm on right now. Link tree in bio, very first link there if you want to get it. So anyway, hope you guys have a great rest of your day. I'll see you guys later. Oh, sorry, I couldn't get to that. Hey, if you go to I'm ending the YouTube stream. If you go leave a comment on it, I'll look at it at the very beginning of the next stream. So anyway, see you guys later. Thank you. Hey, thanks, John. Thanks, Charles. Hope you guys have a great rest of your day. See ya, Shark. See ya, Catherine. When will you go on live again? I don't think I'm going to live stream later tonight. I might, but probably tomorrow, this exact same time. Probably around, oh, yeah. Even though tomorrow's Saturday, I'll still be streaming tomorrow. So, yeah. So sometime before 4. Hey, and if you hit the notification bell on YouTube, yeah, when next to the subscribe button, there's like a notification bell. If you click all, it should notify you as well. So, and you can set notifications on TikTok too to maybe double notify. Anyway, see you guys later. Thanks so much for showing up to the YouTube stream. As you know, I'm trying